Good evening to all of you. We welcome you all to this CP meeting on standards on auditing. As I've been telling in the past, the standards on auditing is not a subject just for CA final, but it is one of the, in fact, I call it as Bhagavad Gita, Bible, Quran, because that will kind of give you way whenever you are stuck or how you should be doing the audit. And the financial statements or the attest function carries high quality and the acceptability only because of the complaints of the standards on auditing. And to the possible extent, they say it should be independent and we should give an opinion that is going to help the users to arrive at what they should infer from the statements. And today we have chosen two important topics in the standards on auditing: documentation and the external confirmations, which are very important. Many a time we have seen the SMPs who do the audit very nicely, but when it comes to documentation, that's the weakest part, where they're not able to prove that they did it correctly. When it comes to peer review, when it comes to disciplinary committee cases where documents are asked to be produced, they fall short of documents. So we thought that appropriately we will choose these two topics only, so that our members will stand to gain as to how they should be doing the audit with regards to especially on the documentation and the informations. And for which we have rightfully chosen the faculty, C.S. Sundararajan, who has got a vast experience in handling bigger cases as well as the smaller cases. So he's the one who will kind of be able to tell in the both extremes how to handle bigger clients as well as the smaller clients. So before we request the speaker to speak, I'll request C. Abhishek to formally introduce the speaker.
Yeah, thank you so much, Chairman. Good afternoon. At first, our dynamic speaker today, C.S. Sundararajan. I'm sure you're all familiar with our speaker. You are more familiar with hearing his annual address, spellbinding address on bank audit, which he will always share with us. And we have decided to request him to give a spellbinding address today on auditing and assurance standards as well. Needless to say, as Chairman put it in a very beautiful way, documentation eventually is the lifeline of an audit. What your opinion is, how you arrived at, all that you may have in your head, but unless you have it in a piece of paper, it is as if no audit has happened. And external confirmations play a very, very key role, I must say, especially if you take the biggest frauds that have happened, not only in India, globally. It usually involves getting a confirmation statement with either a bank for a bank balance, FD balance, or from a third party. And if that had been done correctly, you could have found out everything. And there are times, I'm sure that many of you have faced, because I personally faced this, when we send out confirmations to creditors or when we send out confirmation to debtors, you will get a reply from a proprietor debtor saying, sir, you are saying that I owe so much money to that company. Actually, he sent me all spoiled goods and all. You ask him to refund the money to me as an auditor. So we can't explain to that person, sir, as an auditor, we can't do all this. We are looking at the trial balance and we are going from there. But many comical instances also happen when you send out external confirmations. But needless to say, especially when it comes to your bank, cash and bank balances, your FD balances, your confirmation statements will be a Bible. However, and I'm sure Sundararajan sir will touch upon this, the big question mark is, if I get a confirmation, is that enough? Is my audit work finished there? Is this the so be all end all? Or is there something else also that needs to be done? What are the documentations that need to be maintained? How I should send out the confirmation also? All of these are very, very critical aspects when it comes to any audit. And as I said, we have an excellent speaker today who will take you through this, who I now have the privilege of introducing. C. R. Sundararajan, he's a FCA, he's a DISA, and a fellow chartered accountant and managing partner of his firm. And he holds more than 3 decades of experience. In fact, his offices are present in Chennai, Hyderabad, and Kochi. And as I told you, he's a speaker who's in demand in those cities also and outside those cities also across India. In fact, he's a qualified ISA and specializes in audit and assurance practice. He has been addressing across SIRC and various branches of India and the ICAI chapters, and visiting faculty for various professional bodies, all three institutes, the CNDG, staff training colleges of RBI, Indian Bank, and even IOB. He has co-authored a book on bank branch audit by the CAS Chennai, and has been a part of various groups of ICAI on various topics of interest, including guidance, corporate. He to various committees of and SIR as well. Convener of the Chartered Accountant Study Hall, and he's many work seminars and annual conferences in his role. He has held also the positions of Treasurer, Secretary, Vice Chairman, and then Chairman, the International Fiscal Association, the Southern Region Chapter, and is also a very active lion and a regular blood donor. He's also a person who always constantly motivates me also personally, and I'm sure as he motivates the chairman and other council members, it's always a pleasure to listen to Sundararajan sir. He's a thoroughly erudite speaker, and I'm sure today's session will be more knowledge we'll be learning from him. We welcome you, Sundararajan sir. Thank you so much for joining us today.
Thank you. Good evening to all of you. It's again a great pleasure to address.
Good evening, sir. You'll only hear two voices back.
I see. Why not it started? You are muted. You are muted.
No, we can start, sir. Please go.
Okay. So I'm very glad to be here in a virtual learning course. All said and done, whenever we meet people and directly interact, the discussion will be of a different level. And when it is virtual, we are not sure how much we are able to communicate and how much you are able to take out and how much inputs which you have to give it back to us, because it's a mutually learning process. Because auditing, as all of us know, is an area which has been developed over a period of so many years, not only years, so many centuries, and it keeps on developing. So in that situation, we are here to discuss about only two portions of this entire standards, and where they are maximum and very important and critical. Unfortunately, I have been given an introduction by Mr. Abhishek Murali. Once Abhishek Murali gives an introduction, we will be fighting it to ensure that we stand at least 25% to that level. So please appreciate that the introduction was too good. So maybe I may not be able to deliver to that extent. I will do what best I can do. We'll be definitely having a Q&A session at the end of the program. In between, if you have anything specific also, you can come on chat. Probably this ICAI or chairman can coordinate for a specific query in between also, doesn't matter. I'm always, whenever I speak at the seminars, I always say that the interaction is better. But unfortunately, this virtual learning, it is not possible. So what best I will be able to communicate, I will be able to communicate. And wherever it is required, you can interrupt. Chairman, what is the time available for me?
We'll go till 8, sir, and 10-20 minutes excess also, we don't have problem.
Yeah, okay. So the topic which has been given to me is standards on auditing, documentation, and external confirmation. These are the two standards which has been given. So let me share my PPT so that you will be able to follow it up along with me. Is it visible?
No, not it, sir. Not it, sir. Yeah, it's coming, sir. Yes.
Full view is coming?
Yes.
Okay. First of all, we will have to understand, as both chairman and secretary have said, auditing standards are very, very important and critical. And it has become more critical because of the following reason. 143.9. All along, all we professionals, chartered accountants, even though the auditing standards are being given by the institute for us to be guided for doing the audit, but we have not been given that sort of importance, I can say, to some extent, because that is not statutory compliant. Now, 143.9 has categorically said that following auditing standards is mandatory. In the earlier occasions, before AS Rules 2006, accounting standards was at that time also compulsory because there was no formal AS Rules 2006. But the Companies Act itself was giving directions to ensure that we are supposed to follow the accounting standards. But the auditing standards was not given the statutory importance before 2013. In 2013 Act only, 143.9, they have brought in a specific clause wherein the total compliance on 143.9 has to total compliance on auditing standards has to be done, and now SA is law. Previously, it was not a law. Now it is a law as per Companies Act 2013. Every auditor has to comply with auditing standards. It is not that we have not been following the auditing standards, even though it was not statutory at that point of time, because without following the auditing standards, we will not be able to complete an audit in a proper manner. But at the same time, there was no statutory compulsion for us to do the auditing. I mean, for us to follow the auditing standards while we are doing the auditing. Now, 143.9 is very, very categorical, which means in case previously what happens is whenever I'm not following the auditing standards, the only authority which can take up action against us is only the institute. Now, the statutory complaints that happen in 143.9, and now FRRB or whoever it is, even the government can take up the initiative, and ROC can issue notices nowadays if you have not followed the auditing standards in a proper manner. How they are going to find out and all is a secondary issue, but the point is once they take up an investigation and they go through the papers which has been audited by you, and they are able to find out or they are able to ascertain that you have not been following the auditing standards, they can issue notice to you, which is going to be very, very critical for us to face. So this 143.9 amendment is made mandatory auditing standards. So let us be very, very clear, from 2013 onwards, it has become mandatory. All of us have to follow the auditing standards. You don't have any other option. So in that situation, I would like to mention that auditing standards are as critical or even more critical than accounting standards, because auditing standards are directly applicable to us. Accounting standards, the companies and clients, it is applicable. Yeah, whether they are following it up, we have to mention. As far as accounting standards is concerned, we are supposed to verify whether the management is following the respective accounting standards. If they are not following the accounting standards, we are supposed to report. But as far as auditing standards are concerned, it is squarely and 100% applicable on you as auditors, and we have to ensure that auditing standards are applied. For today, there are lots of standards on auditing. Let us not complicate too much, because each and every auditing standards is independently a session. But this time they have added two auditing standards. One is SA 230 on audit documentation, which is very, very critical, particularly in today's position, because normally by this month of August, all of us would have completed all the corporate audits. At least majority of the corporate audits would have been completed. Only non-corporates will be there. But today's position, all of us are starting now only. Thanks to our government, which was able to take a decision that the extension has been done for ROC compliances, we are able to start now in a reasonable and patient manner. So the audit documentation which I am going to talk now is applicable for corporates, non-corporates, and on the statutory compliances. Second portion of the presentation is on external confirmation, which is SA 505, which is equally and more critical. Actually speaking, external confirmation is also part of the audit documentation. Audit documentation is a very, very comprehensive topic which is applicable to us. Wherever you see, whichever SA you follow, the respective papers will be coming and forming part of the audit documentation. This is what is very, very critical about. Audit documentation is a very, very wide connotation standard. Wherever you do, whichever audit standard, whether it be any auditing standards by way of external confirmation, third-party confirmation, another expert's opinion, another auditor's opinion, all these things will be forming part of the audit documentation. So SA 230 is a standard which is applicable across the board for all the audit, and external confirmation is one of those items. These two topics have been assigned to me. We'll be going through that in a detailed manner. Let us understand for the moment that both have a direct link to SA 500 and 501, which is audit evidence and additional consideration for specific items. Basically, both these items will be creating only ensuring that whether the audit evidence is properly done, because audit cannot be completed without a proper evidence, as given in SA 500. whether that evidences are available, whether it has been verified by you, whether it has been verified by you to your satisfaction, whether the evidence is clear and without any ambiguity is being documented by you in the audit documentation. And external confirmations, when it is taken in writing from various parties, that is also forming part of the audit evidence. On that basis, you have to conclude. So let us be very, very clear. While I read SA 230 and SA 505, I cannot ignore SA 500 and 501. Of course, I'm not going to cover any of those aspects here, except that wherever it is linked to, I will be bringing it there. Chairman, you can mention me whether if I am going at a different speed, if it is okay, you'll have to tell me.
It's absolutely fine, sir. It's absolutely fine.
Okay. This SA is effective for all audits of financial statements for the period beginning on or after 1/4/2019, which is long back. So now we are after 2013. It is very clear that is applicable in respect of all the items, but the standard as it is applicable from 2009 onwards. Previously it was AIS 3, but once this standard has come, this is more comprehensive. It has added all the procedures to be followed during the course of audit and also the post audit. Both are covered in the standards. The primary objective of this 230 are two-folded. One, to have audit documentation. One, to have audit documentation, which gives the basis for preparation of the audit report. Because ultimately, when you complete the audit, you are supposed to give a report. So for giving the report, the audit documentation is going to be the basis. Audit is going to be the fundamental basis. On the basis of audit which you have done and evidence collected, you are supposed to prepare the documentation. And on the basis of documentation only, you are going to conclude whether the financial statements are true and fair. Is there any reservations to you? Is there any qualification or modifications you are supposed to do? If there are any terms of references to be given in respect of the notes and accounts, emphasis of matter of paragraph has to be said. All these things will be concluded only if you have a proper audit documentation. As the earlier gentleman was also telling, it is not sufficient to do the audit. You have to structure the audit in such a manner that you record all the evidences, you record all the documentation and satisfy yourself that this particular transaction is complete. All the evidences have been verified. This is correct. Then only you can give a view called true and fair view. Otherwise, you will not be able to give a report. The next is provides the evidence of the audit planned and performed. Because without a proper planning and an audit cannot be performed. This is very, very critical. Once again, audit planning is another essay. There is a standard which has to be done for audit planning. There is an essay for audit program also. I'm not going into all those items, but I'm telling you, a planned audit will be 50% battle won. A planned audit, 50% battle is won. After that, you have a program. After that, you will do the audit. You will be very smooth in completing the audit. If you don't plan it properly, absolutely it will be a chaotic situation. We will not be able to complete the audit in a proper manner. So let us understand that primary objective of 230 is twofold. One is to have audit documentation which give you comfort level to prepare the final audit report, whether it is a clean report, qualified report or modified report as the case may be. And also it provides evidence that audit has been properly planned and performed. Why this is required? I will come in one of those following slides. To define what audit documentation is, it has to be divided into three categories: procedure, relevance, and conclusions. It is a record of procedure that has been performed. That is, for each and every area of operations which you are doing as audit, what are the performances which has been done. Let us start with a small item of revenue recognition, which comes under AS 9. You have to see whether the revenue in respect of a particular client has been done. Let us understand. I always go with an example because this auditing is absolutely a theory class. Right from 1986, when I have been attending auditing classes, I have been finding it the same difficulty because it makes us sleep. Fortunately, we are in the evening class, not on the afternoon class, but still it has its own disadvantages. So always it is better to have some few classic examples to ensure that we understand in a proper manner. Audit procedure, which you do in case of a revenue recognition. For example, you are taking up an audit of an organization which is a manufacturing activity. Once it is a manufacturing activity, if it is a manufacturing of material which is being manufactured and sold as it is, the revenue recognition is different. Because you buy raw materials, make it into a product and sell it as it is. The revenue is recognized at the time of risk and reward which is being transferred by way of an invoice on a customer along with the delivery. Once it is done, your revenue has to be recognized. There is no complication at all as far as this revenue is recognized. So when you go and verify this particular manufacturing activity, you will have to ensure that that revenue which is being earned by way of a sale of a product has been recognized properly by way of an invoice, by way of a dispatch, and by way of a confirmation from the third party of having received the product. And the risk and reward is also being transferred. Same thing may not be applicable in respect of an organization which is manufacturing a capital asset. What I was talking to you about is an other asset. This is going to be a capital asset. The capital asset, which is going to be an item which is developed over a period of time. For example, let us take a fabrication company which does which fabricates and makes machinery for an automobile spare production company. The order will be given today for piston making machine. Let us understand it is a piston making machine. The order is given today and the dispatch is going to be done after 6 months or 12 months or 1 year as the case may be. When is actually the revenue has to be recognized? Even in this situation, the revenue has to be recognized only after the risk and reward gets passed on. So here, but at the same time, there is going to be a different methodology which has to be verified in respect of ascertaining what is the work in progress value as far as this product is concerned. It is not a raw material. That is in case of other production, it's a raw material today, does some subcontract work, then next week it becomes a finished product and then it is being sold. Here, today I buy the raw material, I make some basic things, send it for a subcontractor, brings it back, makes one more cycle, then send it to another subcontractor for doing polishing, etc. It comes back, once again I send it across. There might be umpteen number of situations, so our auditing becomes slightly complicated. So whenever you are doing an audit of that sort of undertaking, you have to ensure whether the audit procedures in respect of these things has been properly recorded to ensure that you are satisfied with the entire process. What is the difficulty? For a moment, let me understand what will be the difficulty in respect of multiple movement of the product. What happens is today I buy a raw material of 1 lakh rupees. I do some process, it becomes 1.5 lakhs. I send it to one contractor. Contractor charges is only 5,000 rupees. But I am sending a material of 1.5 lakhs, and when it comes back, it is worth around 1 lakh and 55,000 rupees along with the contractor's payment. Then I do some more production modifications, right? It becomes 5 lakhs worth of item. Once again, I send it to another person. The 5 lakhs plus 10,000 rupees of processing charges, 5 lakh and 10,000 rupees. And it comes back as 5 lakh and 10,000. I make further production, further modification, sells it at 10 lakhs or 20 lakhs as the case may be. So each and every stage of the operation, the value of the products keeps on going up. What happens is that stock valuation is going to be critical in each and every stage, number one. Second issue, the risk which the company is managing because of the movement of products from and to of the factory is going to be critical. So once again, you have to go into the concept of how risk is being covered by the organization by way of proper adequate insurance, etc. Apart from this, in between, one more situation will come. When these transactions happen in between the end of an year, what happens is the product is not lying with you, this product is lying with the subcontractor. Your WIP is partly in your factory and partly in your subcontractor's factory. So effectively, the subcontractors have to give you confirmation regarding the product availability. And as far as an auditor is concerned, even though we are not under compulsion to go and do a physical verification of an inventory all the time, I don't say that it is not at all required, but it is not required all the time, because in the car also we are saying the management is verifying their inventory on a periodical manner, and whenever there is a discrepancy available, they are recording it in a proper manner. That's what we are saying in car also. But for that, you have to ascertain whether they are doing on a periodical basis or not. For which, once again, you have to create documents. It is not that you create a document. Documents are available. You verify that and you please record it. This procedure has been followed. I think I am clear in respect of these two categories, and I will just like to go into one more revenue recognition model, which is different totally because it is a long-term contract basis. Maybe a real estate company, maybe a flat promotion company, or maybe a bridge construction company. In those cases, the revenue is also recognized over a period of time on the basis of percentage of completion. Previously, we had a luxury of having an option to go for completed contract method. By virtue of the new AS7, our system has totally gone. We cannot do for what you call completed contract method at all. In fact, I had a discussion with one of my client who is a non-corporate. He said, sir, all these things are applicable only in respect of corporate, sir. Non-corporates, I can do any method there is no compulsion for me to follow AS7. But unfortunately, the new devil called ICDS has come into picture. Whenever a company has following a methodology of completed contract method, at the end of the year, as per ICDS, you are supposed to recompute and find out what is the real profitability as per the percentage of completion method. So in this case also, when you verify the revenue recognition in respect of real estate product or a construction company activity or a project, long-term projects, you are supposed to record what are all the procedures which you have performed to ascertain the revenue which has been recognized by them to the extent of say 25% or 30% or 50% or even 90% for that matter. How is it being recorded? You are supposed to verify. Once you verify, you are supposed to register in your documentation to ensure that the procedure has been conducted, procedure of verification of how the computation has been verified, you are supposed to record. Second portion is relevance. Relevance of this audit documentation by way of an audit evidence obtained. Each and every audit which you do, you are supposed to periodically collect the evidences and keep it with you. Just for an example, they say in respect of a construction company, we have completed only 25% of the project. So recognize revenue only to the extent of 25%. Obviously, the cost will also be recognized to the extent of 25%. How you decide that 25% has been recognized? You are supposed to create an evidence. There are multiple evidences which is possible. In respect of, once again, I take a classic example of a flat construction company. In the flat construction company, the basic revenue model itself will be said that at the level of basement, I am collecting 15%. At the level of agreement to sell, I collect 15%. At the level of basement, 25%. First floor, 30%. Second floor, 40%. Like that, they would have given it. That itself can be taken as a task, taken as a standard for you to determine that. But only thing is, at the end of the year, you are supposed to obtain what is the evidence available to ascertain and confirm that it is only 30%. There are situations where clients would like to show a better profit. So they may be able to say that we have completed 40%. There are situations which are available. There are certain clients which will be under showing their profitability. So they want to show at a lower value. Both items, as far as you auditors are concerned, we are supposed to be totally distant from the actual clientele activity and get the sufficient evidence and keep it with you. Please understand, my friends, the audit evidence on 31st of March 2020, which has to prove you all this information, can never be available on 31st of March 2021. Why 31st March 2021? Even 30th September, it cannot be there. In fact, last week we had finalized one non-corporate audit where they have said that they have completed only 20%. They have completed only 10%. So they will not be even applicable for ICDS. But I proved that by way of the documents which has been available there, because they themselves are collected from 6 of the bookies, 6 of the book to people, they have collected advance beyond a level of 25%. We were able to prove, and then the client has to accept to us, and they have started doing percentage of completion method because they were very much against this, because this is a first larger project for them. They wanted to shift everything to the next year, not for anything else, not for the purpose of tax saving or direct tax saving or as the case may be. It is a sheer ignorance of this accountant who has not paid the GST component in respect of the revenue recognition. What has happened is, whatever be the advance which he has collected from the party, he has paid the GST. Whatever be the advance collected, he has paid the GST. Advance of 75 lakhs has been collected. But once you do a recognition of revenue, it comes around 1.5 crores. Balance of 75 lakhs, I have to pay the GST component in advance because the revenue is being recognized. The job has been completed, service is completed, I should recognize to that extent. Because he was not having this information, obviously because of COVID, he could not do it. But we are not here to consider all these poor situations of the clients, etc. We are supposed to verify whether it is done or not. So in this situation, we have to go by that situation. So I have to collect the evidence and keep it with you. That is important. And finally, the conclusions. On the basis of procedures followed for the audit, what are all the relevant evidences which has been created, and on the basis of evidences, what is the conclusion you have completed? Have you concluded that the audit is fair and accounts is fair and proper? The accounts is true and fair, true and correct, where it is non-corporate and compliant under the tax act, whether it is true and correct. We have to ensure. And what is the conclusion which you do in respect of the audit? If you are complete, there is no complication at all, you are going to give a clean report. If you have a reservation, you are supposed to give a reservation, reserved report or qualified report or modified report, as the case may be. So as far as this audit documentation is concerned, these are their definitions: procedure, relevance, and conclusions. Apart from that, there are additional purposes of audit documentation. Not only for concluding the final conclusion of the audit report, there are also other items, other purposes. What are the other purposes? Each and every purpose is very, very critical, my dear friends. Let us be very, very focused on this matter, because if you know the purposes only, you will know the importance of the documentation. Not only for documentation, any item, we have to know the purpose, then we will be able to ascertain what is the importance of it. Assisting the auditor in planning and performing the audit. Unless and unless you have a plan, you will not be able to see. For example, today, particularly this year, we are having a dearth of staff because we are all working with only 40 to 45% of the staff. There are places where there is no staff at all because they have not been able to come. We have, unfortunately, there is some chat box which is copying up. When will you give the material? The material is already shared with the SIRC. Probably they will be circulating to you as early as possible. Don't bother. It will be sent.
Yeah, we'll share at 7 p.m., sir.
Just because people are anxious about the content of the material, but I request people to hear fully, then we can take it forward in a proper manner. So it is going to assist the auditor in planning and performing the audit, because without proper planning, you will not be able to do a performance of an audit in a proper manner. Assisting in supervision and review of the work. All said and done, this is not the fact that, because many auditors, when I have an interaction, they say, sir, all the 6 are applicable for larger organizations only, sir, not for smaller organizations like us. Please understand, my organization is not that very big. We have only 40-50 people of manpower and few partners. But at the same time, what I was doing 15 years back, I am continuing to do today. And what I'm doing, I have been doing for the past 15 years. The reason being, whatever be the situation we are in today, may not be the same situation after 2 years, 3 years, because all of us are in a problem that once we get a notice or letter, all of us get panic. This is the reality. Let us be very, very clear. So at the time of that situation, you will not be able to create any documentation. So at the time of audit, we have to create a documentation. At the time of verification, we have to do the supervision in a proper manner. At the time of audit, you are supposed to do a review. The reason being, we have scale of people. One clerical level person is doing one sales verification. A slightly above person is doing the data's balances verification and also data's confirmation. And a person above him is doing the preparation of the financial statements. Unless and otherwise all these 3 people are linked to each other, you will not be able to certify the financials as to the data's verification, as to the data's of more than 6 months, less than 6 months, and data's consisting of MSME, which is a new animal which is to be reported. And in that MSME, small and medium, that is micro and small, has to be shown on the face of the financial statements itself. How do you do all these things? Unless otherwise, you supervise the staff and review the staff and check up with them whether they have gone through this verification at all. If you don't have this audit plan and documentation, you will not be able to ascertain from the students whether they have done. This is one side of debtors. Let us go into the next situation of bank, which Abhishek was also telling. Bank reconciliation. There is a great myth as far as students are concerned. The students who are working on Tally platform, they think that bank reconciliation, which is done in the Tally software, is what is bank reconciliation, which is not. The reconciliation of bank is between the cash book as per your book and bank statements, which are 2 different documents. You are supposed to compare these 2 documents, compare it, and prepare a reconciliation statement. And in the outstanding statement, we should know when it has been cleared in the subsequent year. If only this documentation, I don't want to mention the company's name or client's name or auditor's name. If only this was correctly seen in one of those organizations, that the bank outstanding items have been either cleared after the end of the year, or if it is not cleared, if it is reversed. If it is cleared, no problem. But if it is reversed, then the entire revenue recognition as 31st of March itself is wrong. Same thing is applicable in case of bank audit also. On 31st of March, they show a collection. The account becomes a performing asset. And subsequently on 4th of April, it gets reversed. What does it mean? This account is a non-performing asset only. If you have not been able to verify the subsequent reconciliation, you will not be able to ascertain this. As far as this work is concerned, I'm 100% sure none of the persons at our partner level go and see the bank reconciliation statement, how they have done it. We don't see the bank reconciliation, but we are supposed to see how they have done the bank reconciliation. This is what my point is. So unless and otherwise, if they have not documented it properly, how will you go and verify the reconciliation statement has been properly done or not? Whether the outstanding statements have been cleared or not? Whether the outstanding checks which has been given has been presented or not? How the amounts which has been deposited has not been cleared or not? If you don't have the papers, you will not be able to verify. This is an important area for documentation. Same way, you can go into the GSTR reconciliation. GSTR returns, monthly returns are being filed by all the clients. But what happens is at the end of the year, there may be lots of inputs which has to be reversed because that input is not available. For example, they have bought a car. They have claimed the input credit. In the monthly return, they would have done it. Unless otherwise you do a GSTR audit or GSTR final review, you will not be able to ascertain whether that input credit is available or not. If you are going to postpone this verification of this input GSTR for a later date, because all of us know GSTR 9 and 9C, etc., is being deferred. At some point of time, it will be said that GSTR 9 and 9C is not required at all. But what happens is, when the authorities ultimately they do the verification, they will reverse the entire input which has been credited, and this input, what has been reversed, will be levied along with the interest. And both these items is effectively a cost of the company in this current year and not in the subsequent 2 years. After 2 years, it is not the case. It is relevant to the current year. So unless and until you verify how the students have verified these transactions, you verify the documents of them. If you don't review it, please understand we are in for a problem. Creating accountability in work. Obviously, the students, unless they put on record, for example, in our office, we have an SOP. So we have an SOP for most of the activities, particularly in respect of audit also, we have an SOP. So whenever a person is going to be given a verification of bank reconciliation, they are supposed to do all these things, whether they have obtained the bank statement, whether they have obtained the bank confirmation, whether they verified the bank book as far as this party is concerned, whether the closing balances are matching, whether the transactions of a specific month has been verified, which month has been verified. See, the point is we are not supposed to verify for the entire 12 months. We are going to do a sampling only. Which month we are verifying? March month, definitely we have to verify. In between also, we may be verifying. Which month we are verifying? Very, very critical. That has to be recorded, because whenever in a case of a future problem, we will be assuring that this month we are verified fully. For this month, you ask any question, I will be able to answer. Retaining a record of significant matters for future audits. Very, very critical components. All said and done, Companies Act 2013 has provided all of us a great comfort that we will be the auditors for each and every company, at least for 5 years minimum and 10 years for maximum. After that also, if the rotation is not there, you can keep reappointed, which means whatever you do this year, it will have an effect in the next year. I will just take a classic example. As I told you, please pardon me if I am shooting up with a lot of examples. Examples are important to ascertain the importance of the documentation. For March 2019, when I did an audit of a company, there was no problem. We have finalized the accounts, everything. But at the time of signing the financial statement, it was in the month of June, around mid of June, there was a fire in the company. When we are doing the audit, there was nothing there. Completed the audit and all, we are completing in the head office. The fact is there was a fire. At that time, we verified whether this fire has an impact in the organization's profitability of the earlier year 2019 by virtue of some stock losses, etc. we ascertained and we determined that there is no issue as far as the previous year is concerned, because all the stock of that year has been disposed of, sold, or as the case may be. But we have recorded in our audit documentation, and we have more fully recorded in the notes and accounts itself, because it is an event occurring after the date of balance sheet date. We have recorded in the notes and accounts saying that subsequent to the date of balance sheet date, there was a fire incurred in the factory. However, the impact of the fire is not there in any of the financial impact of this particular current year. With that, it was over. There's no problem. In fact, my client asked me, sir, when it does not have any impact at all, why are you giving a note itself? There is no compulsion at all. Because events occurring after the date of balance sheet, only if it has an impact on the revenue, you are supposed to report. Here, there is nothing like that. Why are you reporting? I said, sir, as on date, we have determined already that it is not having an impact, for which we have records. We have no records to prove that it does not have an effect on the financial statements of March 2019. But please understand, this will have an effect on the impact on the next year. Current year, March 2020, my dear friends, please understand, till today, that is, till what you call the 13th of September 2020, insurance claim is not settled. Surveyor is not satisfied with the insurance claim documents. He is very categorical, saying that the fire is not natural, it might be artificial, or the fire should have happened only because of a negligence of a particular team of people. It is under, he is not able to complete his survey and give a report. Now, 31st March 2020 audit, which I am doing now, I am supposed to give an information. If I have not got the information in respect of that May 2019 or June 2019 fire at my records last time, this year when I do the audit, I may not have the immediate information. Honestly telling, my dear friends, my staff did not know this. My staff did not know this at all. They have been doing the entire audit, etc. If the insurance claim has come, for a moment, let us understand, if the insurance claim has come during the year 1920, definitely party would have accounted the amount received as insurance claim. Then the audit assistants would have verified that the insurance claim is so much, the loss is 1 crore, insurance claim is received as only 96 lakhs, 4 lakhs has to be written off in the P&L account. Or the other way around, my total insurance claim is 90 lakhs, I have collected 92 lakhs by some reasons or other, that is loss of profits, etc. There is some other additional item which has been done. So in that situation, there is no impact at all, there is only an actual profit. This is also possible. If the insurance claim would have been received, they would have completed and given the audit report for me. In this case, they did not have. So what has happened is, they have completed the audit to a great extent. When I was going for a continuous review on a periodical basis, of course, assessee also, the client also has not told the staff regarding that insurance claims, etc., because they have not asked. Please understand, auditor, the word has been taken from French word. I am informed by my boss 30 years, 40 years back, that adhere, that is, you have to hear properly. So what you hear, you have to first ask, they have to give adhere, and the auditor has to record it in your paper and do the needful. The problem is, students, unless and otherwise they ask questions, they feel what the students ask questions, they are not going to give a response. Then how do you expect them to give answer for a question which is not being raised? So they did not give answers at all. Because of the last year paper, when I have remarked, I have put in the last year audit papers, significant matter for future audit. I have recorded in my audit working paper. So when I went for the third review of the organization, I asked my students, have you done verify any auditing as far as the insurance policy or loss of product? Sir, nothing, sir. There is no loss at all, sir. Nothing has happened, sir. There's no problem. Company has done. I said, there was an insurance fire on this date. What happened? Then I brought the what you call deputy manager finance. I did not go to the higher level, deputy manager finance to the table and asked him, what is the situation? He brought a big file and gave it to us. After that, the audit took another 3-4 days to get reasonable completion, because the entire papers have to be gone through. Please understand that retaining a record of significant matter for the future audit is definitely possible only in case of the audit documentation. Please, again, I want you to appreciate, it is not that this is applicable only in respect of larger companies. It is applicable in respect of smallest of the smallest companies also. Smallest godowns, there were fires which are available. 2 lakhs, 3 lakhs loss. 20 lakhs turnover companies, 2 crores turnover companies, all these things are applicable. So please understand that audit documentation is critical for each and every company. Enabling the conduct of quality control reviews and inspections according to SQC1. Institute has one sequence of SQC1. There they are giving quality control reviews are happening. On that basis only we are supposed to maintain the records. Whether we are maintaining the proper records. So whenever you go, if you have been subject to peer review, the peer reviewer, first thing you should ask is whether you are having the SQC book with you. If the SQC book is not with you, the peer reviewer is supposed to give a commentary on his report saying that the peer reviewed auditor is not having the SQC books. This is the impact of the SQC. So as per SQC, you are supposed to have these reviews for which documentations are required. Last but not the least, aids in complying with peer review process and disciplinary mechanism. God willing, none of us will be having a disciplinary mechanism. But once it happens, please understand we are in for a problem. I am having a reasonable amount of experience by discussing with people, not in a great manner, but discussing with people who are suffering because of this disciplinary mechanism issue. Smallest of the smallest auditors are having problems from the smallest of the smallest clients which are possible. There is a client, there is an auditor who has signed a financial statements which is not coming under tax audit, he is facing a disciplinary mechanism. The reason is he is not supposed to certify at all, but he has certified. Why he has certified? One partner asked for the certification, he signed, but unfortunately, the partnership deed says both the partners have to sign in respect of the financial statements. Now, the complaint is that the auditor has colluded with one of the partners and signed the financial statements. This is as far as disciplinary mechanism is concerned. As far as peer review process is concerned, I am 100% sure at least 80% of the people in the crowd would have already faced peer review process. Whenever you are subject to peer review process, they are first asking for your working papers. What is your audit working papers in respect of the clients which they have chosen? Audit consists of both permanent working papers and temporary working papers. They go through the working papers. If you are proper, they are not supposed to verify each and every working paper, but they are supposed to verify whether you are maintaining the audit working papers. If you are maintaining the audit working papers in accordance with all the audit documents, SA 230 as well as SQC, they close their back file and goes beyond that. I have also been part of the. I have not been registered as a peer reviewer because it is against my consciousness. But the point is, I have assisted certain people to do the peer review audit. We have verified the biggest of the biggest firms are having lack of documentation. It is not that only small firms are having a lack of documentation. Biggest of the biggest firms are also having lack of documentation in certain areas because they take it for granted at that point of time. So at the time of peer review, you cannot keep on searching for this documentation. I will share a classic example in one of the peer review, one of the big firms. What has happened is the tax audit report, now it is not there. Previously, that clause was there. After the last 3 years, it has been removed. Whether the auditor has taken a written representation in respect of cash deposits beyond 20,000, cash expenses beyond 20,000 rupees, 40A3, or cash loans in respect of more than 20,000 under 216SS and 216T. Have they taken written declaration? We have to say yes or no. If no, how you are concluded has been mentioned. If you have mentioned yes, fine, you can very well go ahead with that. That auditor has put as yes. I asked them for that work paper. They said, no, sir. This is a very, very reputed company, sir. They will not make any cash payments at all. Sir, I am not concerned about that. As a peer reviewer, you have given a report in your audit report saying that you have taken the written representation. Where is the written representation? It was not available. They had to rush to the client. Fortunately, all of us are professional brethren only. I allowed them to get the letter from them. They gave the letter and left it like that. Within this group, I am able to share this information without mentioning the client or name or whatever it is. But my point is, and this should not happen at all. Because at the time of auditing, when you are signing certain things, you are bound to accept saying that yes or no. You be very categorical. Whenever it is yes, please ensure that the documentation is being maintained. In fact, in our office, one of the SOP is when you create an UDIN, audit report should be ready. Without audit report being ready, UDIN will not be created. The reason being, now you prepare some financial statements, prepare a UDIN and go apply for whatever it is. Subsequently, you will not do the audit report. After 3 months or 4 months, we will see when we file to the registrar of company, that time we will find out there is something wrong. So this is also an important item in the audit planning and audit protocols. You have to mention very clearly. UDIN can be created only when the audit report is ready, because UDIN is not for the financial statements. UDIN is for the audit report. So unless you complete the audit report, don't create a UDIN. Form, content, and extent of audit of SAM versus CAM. SAM and CAM is not mentioned in any auditing standards. I'm just coined it. SAM stands for size, audit, and material misstatements. That's all. It's nothing more than that. You don't have to bother about that. CAM, conclusions, audit evidence, and methodology. That's all. Nothing else. It's for easy understanding. I have put like that. The form, content, and extent of audit documentation is definitely varying from case to case. What I am talking about, an organization which is 5,000 crores will definitely not applicable for a 5 crore company, and neither for 50 lakhs consulting company. There can be a doctor profession which you are doing the tax audit whose turnover is around 55 lakhs. You may be signing the financial statements of them. There, you cannot come and say that you have to have this set of documentation. You are supposed to verify all that. It is not possible. But on the left-hand side of the column, size and complexity. Accordingly, you have to have the audit procedure. For example, I have one client who does not pay not even one naya paisa in cash. Not even one naya paisa. That is, they pay the tea coffee fellow also only by transfer of electronic transfer only. If their office is in one of the SEZs, they don't handle 1 rupee of cash also. There, the risk of material statement audit procedures is going to be totally different. Not that they are, otherwise they are very clean. That is not the point which I want to drive home. In this case, when you go and verify in respect of cash, that is 40A3 need not be bothered. Because once you see the bank statement, you will be able to ascertain there is no movement of cash at all. So 40A3, 216 SS, 216, all these things are not relevant. And moreover, internal control is also not no relevance at all. Internal control in respect of cash defalcation is not going to be there at all. But doesn't mean that you are away from all the problems. You have other problems. That is, whenever a payment is being made for an expenditure, you are supposed to verify whether it is by way of an account pay, cross check, or draft. That is not possible to be verified from all these systems. It should have a different audit procedure. I'm only highlighting you that in a classic case, it will be verified like this. Same way as in the case of a doctor, you may not have any financial transaction other than the routine salaries of the staff, etc. In that situation also, all of the things he may be drawing only. So in that situation, there may not be any complication at all. So if the complications are not there, your audit procedures has to be modified accordingly. Please, it is on case-to-case basis. You are the person who is sitting on that bench at that table to suit the requirements accordingly. The exceptions identified. Once again, conclusions, audit evidence, and audit methodology and tools used. Going to the audit methodology and tools used. Let us also understand what is the fundamental accounting system which the client is following. If they are having tally, the system is going to be different. If it is a tally with sufficient internal controls, including the inventory inbuilt in the tally, the system is going to be different. If there's tally with multiple supervisors and we have already created a system wherein there will not be any rectification which is possible without the approval of the top management. In our office, just for sharing of example, in our office, the staff level entry cannot happen beyond 15 days. 15 days, the system is blocked. Tally only, but 15 days it is blocked. So if they have made some corrections or modifications to happen, they are supposed to come and approach the person in charge of governance to ask them to open it, or through their password, we have to pass the entry. If your client has that sort of system, your comfort level is going to be different. Same way, if it is an ERP or a SAP, it is going to be a different ballgame altogether. Let us understand that definitely at least 60-70% of your people will be handling few clients who are doing a SAP. I am also not handling much of a client. I have only 7 or 8 clients who are in SAP and ERP. But the point is, in SAP and ERP, one advantage for auditor is any transaction is not without a trail. Any transaction which is entered into has to be only reversed by way of a journal. You cannot Control Alt Delete is not possible in case of a ERP. Whenever you pass an entry, it has to be only reversed. So in the audit trail, you may be able to understand what all the entries which has been reversed. From that, you may be able to verify it. It's a good one. But at the same time, you should have the knack of identifying what is there where is that particular audit log which is available. If you don't do that, you are at a loss. So whenever you are going for an ERP verification, ERP-based verification or a SAP-based verification, first equip yourself to verify that and then go into the audit. Accordingly, the methodology will undergo a change. So the point which I want to drive home in this slide is the form, content, extent of audit documentation, report, whatever it is, will all depend on case-to-case basis. You will not be able to say that Sundararajan has said that this has to be done. So accordingly, this will be done like this. It is not possible in case of an audit because it is more of a case-to-case basis area. So when you are doing X company, methodology is different. If you are seeing Y company, it will be a different methodology. If you are verifying a company which is trading in manufacturing fixed assets to be supplied for another organization, the fixed assets itself is an inventory for him. It is not a fixed asset for him. It is an inventory. But out of that one fixed asset, he moves to sample for exhibition item. Then it becomes an inventory. So you are supposed to verify for each and every case in a different manner. Accordingly, you have to do this. How do you maintain this audit documentation? Whether it has to be on paper only, whether it has to be on nothing like that. Your standards give you freedom to maintain form of documentation either in form of working papers, electronic system files, but only thing is please ensure that it is not modifiable or adaptable. Once you save it, it should not be modified or adaptable, because once it is modifiable or adaptable, the fundamental strength of the audit working paper is lost. Fundamental strength of the auditing paper is lost. So once you do, it should be in uneditable format. That is once you are concluding. That is, audit working papers will be dynamic only. But after the audit is completed, audit report is over, the electronic system files which you are creating has to be ensured that it is uneditable. Any other media by way of a pen drive or hard disk, or as the case maybe, you can make it. Even in cloud you can have. There is no compulsion at all. Whenever a peer review happens, you have to download that and show it to them. That's all. But what is critical, very, very critical, I request all the people to see the bold letters. It has to be written and contemporaneous. Please understand, I cannot make audit documentation after 6 months the audit is over. We are not creating documentation here. Please understand, we are not creating. Documentation is not created by us. It is generated along with the audit. Audit documentation is not created by you. It is generated along with the audit. Please understand, you cannot do it independently. After the audit, entire audit is over, you go and verify the document. It is not possible. Only thing what is possible subsequently is assembling. The audit documentation has to be kept on. For example, today you are doing the bank reconciliation. You take all the confirmation of balance and keep it with you. You see a debtors verification, see the MSME segment, all these things you verify and keep it with you. Probably you can keep it in a separate file. All these things can be assembled at the final stage, for which a time is available. I will come through one of these sheets. But what I want to tell you is, it has to be a written document, contemporaneous document. It cannot be post facto. It cannot be post facto. In fact, one of the meetings, in the bank audit documentation, they asked audit documentation post audit. They have asked me to put the topic. I said, if I put the topic, it is dangerous. They said, you put the topic, sir, let us understand what is it. At least 2 of my earlier teachers and one of my boss all asked him, hey, what is that you are talking? Audit documentation post audit? It is not possible. Sir, you will have to come to the class to understand that, sir. So in the class, I mentioned that topic is myth. Topic is myth. It is not right. It is mythical topic. Point is, we wanted to create an interest to ensure that people will understand this. There is nothing like documentation post-audit. Documentation is contemporaneous, simultaneous, along with the audit, and only assembling can happen subsequently. I want you to be understanding very clearly 3 items. It can be in written documentation for working papers. Second, it can be on electronic system files, other media. But the second and third item, it should be in such a manner that it is uneditable. It has to be saved in form of an uneditable format so that it will be available at any point of time. Other media includes cloud also. critical item is it has to be written and contemporaneous. Let us go into examples of audit documentation, because all said and done, you keep on saying documentation. What is audit documentation, sir? All these things are examples of audit documentation. An audit plan, which is overall plan. That is, I am starting the audit on 12th of September. I am going to complete on 15th of October. From 12th September to 15th October, first week will be this, second week will be the third review, fourth review, final review, conclusion. Like that, I will have to have an audit plan. Audit program, within the plan, how it is being structured. That is, bank payments, etc., will be verified by this person. This purchases, etc., will be verified by this person. These are the areas which will be done. In the audit program, you will create what is audit samples, which is being generated. What is the materiality component which is going to be applied for this year for this particular client? On the basis of materiality, what is it you are going to verify? On that basis, you complete this audit also. This is the second portion of it. Audit programs is very comprehensive. It consists of audit checklists, etc. Copies of agreements entered into by the clients. What are the copies of agreements you have to ask for? Any agreements entered into during this period has to be definitely verified. What has been done previous years, you should already have in the audit documentation. What is freshly entered in the current year, you are supposed to take the documentation, maybe lease documentation, maybe a customer order, maybe a capital assets expansion, anything for that matter. All the agreements has to be taken. Can be labor agreements also. There can be a fresh labor agreement signed along with the labor unions. That can be a list of agreements which has been. All the copies of agreements you are supposed to mention. Take the case of non-corporate borrowers. Whenever you are picking up the non-corporate borrowers, please understand that the audit partnership deeds can be multiple times amended. So whenever it is amended, you are supposed to take the copies of the partnership deed, amendment deeds with you, because A might have been drawing X remuneration, B might be drawing Y remuneration. Now it would have been swapped. A's son would have come, B's daughter would have come. We don't know. The partnership agreement at that time, we would have decided that loans will be signed by only 2 partners. Now it might be loans should be signed by 3 partners. All these things are very, very important. Please ask for the copies of the agreements and go through that. If you are doing an LLP audit, please go to the ROC site itself. Because whenever an LLP agreement is signed, it has to be filed with the registrar within a specific period. Please ensure that the document is being downloaded. Same way, if they are entering into a mortgage agreement with anybody, you might be able to verify in case of a corporate by way of verifying the Form 8 also. Go for a search and do the documentation. But at the same time, take the agreements from the clients. There can be an ECB which has been signed off with the principals, external commercial borrowing. There is an extra possibility that external commercial borrowing is closed by way of conversion to equity. There might be an agreement which has been created. I can't limit. This is the agreement which has to be maintained. Copies of all the agreements which has been signed by the client has to be taken up and do the needful. Checklist. For each and every area of verification, please prepare a checklist. Say fixed assets, say current assets, say inventories, say deferred tax assets, say the case of current liabilities verification, say the liquid assets verification, say the sales revenue recognition, say purchase cost, payroll. For each and every area of critical area of verification, please prepare a checklist and give it to the staff. The staff has to fill up the checklist or whether they are done according to that. On that basis only, the first slide I would like you to remember, we will do the review. On the basis of the checklist, if they have done it, we will be able to do a review in a proper manner. Once you do a review, you will be able to come to a conclusion in a proper manner. Please understand, we are keeping the documentation on the basis of procedures followed to have a proper conclusion on the basis of the evidence. This is simple. 230 is very, very simple. I am supposed to have documentation of all the procedures in respect of an audit for obtention of evidence, which will give a confirmed level to give a proper conclusion. For doing this, all these things are required. Analysis done. Ratio analysis is very, very important in respect of any client. The reason is ratios will open up a lot of issues for you. Whether it is a current ratio or whether it's a profitability ratio, whether it's a GP ratio or NP ratio, as the case may be, all these ratios are very, very critical. Please do a ratio. Please do a comparison. In case of a non-corporate borrowers, is going to be very, very problem. The reason is, in case of non-corporate borrowers, you don't give the previous year figures. In case of corporate borrowers, you give previous year figure, at least you will have an opportunity to compare. But in case of non-corporate, there is no compulsion for you to give a previous year figure. So you tend to not do this cost verification comparison. Please understand, in this area, you do a ratio verification. Once you do the ratio verification, there is every possibility. For example, in this year, 1920, many of the organizations are not affected. They have completed almost all the sales by March 20th. But I have a client who has lost 40% of the revenue. The reason is they are handling capital projects. The projects were supposed to be delivered in the end of the year. Up to March, they have done all the WAP. The last 10 days, they are supposed to dispatch. The turnover has gone down from 56 crores to 32 crores. It's actually speaking, it's a what do you call, I can't say it's a myth, but it's a reality, but it is a misnomer. When you go and understand, you will not be able to understand unless you see the party. So in this case, let us understand for the time being, it is taken up for scrutiny. They come and say, how March 20th only lockdown was announced. How did you have so much of reduction of sales? There is something wrong. Your profitability is not accepted. You should have paid around 6 crores as tax. You have paid only 1.5 crores as tax. If you have the documentation properly, and at the end of the year, talking about the WAP which is available in the stock, there is a WAP which is available in the stock, which margin is around 30% GP margin. So in that situation, we may be able to justify to all the authorities the reality is like this. This is for the year 2019-20. Let us talk about 2020-21. 6 months, no operations at all. First 2 months, absolutely zero operations in most of the manufacturing activity. SIZs were opened in the month of June. Okay. There are lots of institutions which is not fully operational even today because they have allowed only 50% operation in certain places where still COVID is prevalent. What is going to happen in the current year? If you have a ratio analysis when you do the audit of 2020-21 in compared with the previous year, you should have a justification and then do the audit. Same thing all of us we do in case of a bank audit also. In the LFA, they are asking for a specific question where they are saying that whether the advances and interest on advances is correspondingly increasing or decreasing as the case may be. So ratio analysis is very, very critical. Letter of representation SA 580. Please understand this is very, very critical. In most of the information, letter of representation is only recourse available for you, but you cannot blindly accept the LOR only. LOR is only a tool. It will not save your skin fully. Let us take the classic example of the major fiasco in the recent case, which is ILFS. In this, the case is still going on, so we cannot discuss beyond the level. But what happens is the LOR alone is not going to save the auditors. Auditors are supposed to have additional documentation verification apart from relying on the LFR. But LOR is important. LOR is important because many items we will not be able to verify beyond a level. Correspondence, including emails regarding any significant matters, when you are discussing with the CFO or the managing director, please take down all those things and keep it in your audit working paper because that will have a significant. For example, as a case, in the case of insurance activity, June, that insurance fire has happened. In somewhere in the month of September, they took a certificate from me saying that these are the book value of those assets which has been lost. They took a book value certificate from the auditor. So that is available as a email correspondence for me. That email correspondence I have downloaded and kept it. So it is useful for the purpose of audit documentation. These 3 letters which has been put on red is very, very critical. The content and extent of documentation should be in such manner that it is sufficient for an experienced auditor to understand that the work was carried out despite having no connection with the audit. That is, if I have done the audit this year, after 4 years, my partner Ramesh or any other staff is taking the work, he should be able to conclude this audit has been done in a proper manner. The same way, take case of a peer review. A peer reviewer comes, who is an experienced auditor. By seeing your papers, he will be able to understand that information in a proper manner. If that is there, that is the quality of the best documentation. So you cannot have a better explanation than these 3 sentences, which is importantly highlighted in the standards also. What are the key factors as far as documentation is concerned? Nature, timing, and extent of audit procedures. This I am keeping on telling. Nature, timing, and extent. Timing is very important. It has to be simultaneously go with the audit. Results of the audit procedures performed. Once the audit procedure is over, what is the result? That is whether the WIP verification valuation has been properly done. You have to conclude whether the AS recognition has been properly done. It has to be done. Audit evidence. You have to ensure that the audit evidence is properly maintained or verified, obtained, and then copied also in your records. Significant matters like, once again, I repeat, because I don't want to have too many examples. I will repeat the same example. Insurance, how it has to be dealt with in a proper manner. Insurance has significant item in 3 items. In the same case, one portion is stock, one portion is machineries, one portion is civil structure. You have to understand how you are dealing with each of these items. In case of an inventory, there is no problem at all. Why? Inventory is being valued at the end of the year on the basis of available stocks. Obviously, the stocks which has been eroded or burnt in the fire is already gone. So at the end of the year, you did not have any valuation to be done at all, because the valuation of stock is on the basis of physical verification which has been done on 31st of March. What will you do in case of a civil structure? So civil structure, there might have been some damage which has happened for some portion. One portion would have been totally demolished, one portion would have been modified, or whatever it is. In that situation, if it is a totally demolished area, you are supposed to write off certain portions of fixed assets or by way of building itself. One building is totally demolished in that situation. Take the case of equipments. There may be multiple situations. One equipment would have been totally burnt. One equipment is partially burnt. One equipment, one of the components would have been partially burnt. Fortunately, from 2013, there was a componentization of the machineries. So you would have componentized and valued. So in that situation, that particular component alone you can remove, you can impair. You have to provide for the impairment because it does not have any value at all. See, when the assessee can come and say, no, sir, it has a value. Assessee can come and say, sir, don't worry, sir, all these things has a value. Then you have an evidence wherein they have said it has lost value and they have made an insurance claim. So that evidence and this evidence are contradictory in nature. Yes or no? So please go through the information, what is additionally available apart from what is being shown to you, what is being seen by your staff. Something beyond that is required to be verified. But it's not that you are going and doing an investigation, but apparently what is available, you have to ensure. And the last one is important, significant professional judgment made. After all, you are the person who is sitting on that particular location. Like what I am sitting here and I'm presenting the top product. It is not that you don't know documentation. All of you know better documentation than me. But today, I am sitting here and making a professional judgment and professional address, saying that this is the thing which has to be done in the same manner. At the time of auditing, you are the person who are signing the financial statements. At the time of signing the financial statements, you are taking certain professional judgment. You take a case. Let us take one more classic example. MSME debtors. I am 100% sure all of you are going to face this problem. As far as MSME creditors are concerned, MSME creditors are concerned, MSME Act says that whenever a person is not paying the MSME creditor beyond 45 days, he is supposed to provide and pay interest, irrespective of the contract between the supplier and the company regarding the period of credit. Because credit period may be 60 days, credit period may be 90 days. Earlier, that confusion was there. Now, MSME Act is very, very clear. Irrespective of the contract between the supplier and purchaser and supplier, if it is beyond 45 days, you are supposed to provide interest, pay interest. Clients are saying, why should I pay interest? Because the client is the creditor is not asking for that. He is only asking for order. He has agreed to take the money in 60 days. But as far as you as an auditor is concerned, there is a statute. There is a statute which has, notwithstanding any provisions of any other act, notwithstanding any, say all of you know that no CLAR has come. That is in the Code of Ethics. There is a clause called no CLAR, non-compliance of laws and other regulations. There is a no CLAR item has come. So you are supposed to understand all the laws of the country. 100% I am sure that I don't know many of the laws of the country. There may be so many laws, but whenever you are going for a particular unit for audit, you are supposed to verify all the, for example, you are going for a firework organization, you are supposed to understand what is Fire Services Act is happening, what is quality surplus, quality protection, which is supposed to be done in respect of fire. All these things you are supposed to verify. Like that, you are supposed to verify MSMED Act also. What is the decision which you are going to take? I have taken a decision in one of the clients that I'm not going to make a provision. You can ask me, how, sir? There is a statutory responsibility. You are talking so much on auditing techniques, etc. How you yourself can violate the provisions of MSMED Act? Please understand. You are always authorized to take a professional judgment in respect of these cases, because any provision which is supposed to be made, if it is not made, first item is a provision has to be made. If it is not made, auditor is supposed to mention that. When an auditor is supposed to mention that, whenever, not only MSMED, I'm talking about any other provision for that matter, whenever the non-provision of this particular item is going to have an impairment in respect of the financial statement, and there is a material misstatement. Material misstatement. If it is not material, I'm not supposed to bother. This is my conclusion. May be wrong. There may be some differing thoughts from the other auditors also, but I'm telling you, I am taking call in one of these cases that once it is not material, I don't have to provide for it. I'm not going to disclose also. But there is another case where it is material. So what I'm doing, I have given the option to the client to have two options. One is you provide for it, leave it. There is no problem, we will provide. The other item is you don't provide for it, we will give a note, and also in the main report we will say that this provision has not been made to this extent. To that extent, the report is modified. The discussion is going on. How I am going to finally decide is on my professional judgment on that particular day. Why I am telling you is, you are the person at that particular point of time to make a professional judgment. Please do the professional judgment in a proper manner and then conclude. Please understand, the identifying the characteristics of specific matters which are being tested. We are not verifying the entire transactions. We are verifying only few transactions. First of all, you are supposed to do the audit sampling, for which you have to have the documentation. In the sampling, you have verified what are the areas which you have tested, how you have tested. Please take it, and who performed the audit work, and also the date on which the work was completed. Very, very critical, because audit documentation says, please have an information who has done the audit, when it was done, who has verified, reviewed it, and what is the conclusion. Please understand, this is very, very critical component in respect of both peer review as well as in case of a disciplinary mechanism. Once again, this will be a repetition of all the material is going to be circulated to you. You can go through the information. For exceptional circumstances, one of these previous slides I would like to mention. Details of significant matters with the management others, you are supposed to discuss with them and record the discussions. And the second portion is, there is an information about a significant matter which was identified and has not been the concurrence with the auditor's final conclusion. You have a conclusion, client has a different conclusion. If there is a significant matter which is going to have come to your thought process subsequently, that also you are supposed to verify and do the documentation. Auditor shall document how the inconsistency was addressed. The example which I was telling you about is MSMED. I raised this point, the management raised this point, I compared both the items and said that this is the way I have concluded it. Nobody can question. Please understand, the entire code of ethics or the disciplinary mechanism is on the basis of two components. One is whether the auditor was negligent, the other is auditor was grossly negligent. If you record all these things, in spite of that you make a mistake, then it is negligent. If you don't any of these things and make a mistake, it is grossly negligent. If you do all these things and do it perfectly, you are not negligent. There are three components. One is, if you are not negligent, you are safe. Wash off your hands and go. But if you are negligent, you have all these verifications, and still in spite of that, there is a mistake which has happened, it is negligence. If you don't maintain all these things, you are gross negligent, you are liable for punishment. Please go through this and code of ethics also. It will be very, very critical component. SQC1 requires firms to establish, this is the assembly of final audit file. Because audit documentation is completed, we are supposed to have a assembly. Because as I told you, documentation is doing along with the audit, but assembly is done at a later date. Assembly, SQC1 requires firms to establish policies and procedures. All of us have certain standard audit procedures, standard operating procedures for your audit. You are supposed to maintain, at least for larger clients. In the smaller clients, you don't have to have an exhaustive matter, but you should have basic things. Once you go into the audit, in case of a even in case of a tally audit, please ensure that the opening balances are verified. Because last year was a different file, current year is a different file. Please ensure that the opening balances are verified. The students are supposed to verify that. Without that, you are in case of a tally. In case of a SAP, it is not required because it is a continuous process. Once you go and prepare a trial balance from 1/4/2019 to 31/3/2020, it comes automatically with the opening balance, which was the closing balance of the last year only. You don't have to bother. But in case of tally, it is not like that. So you have to change your methodology accordingly. The second portion of this slide is an appropriate time within which they complete the assembly final audit is not more than 60 days after the date of audit report. Again, I repeat, for the sake of repetition, please forgive me. The audit documentation has to be created along with the audit, but the assembly has to happen within 60 days after the date of audit report. After the date of audit report. Please understand, even today, many of the auditors are doing an antedated audit report. UDIN has to be created within 15 days. That is why I told you the other time itself, UDIN should not be created without finalizing the audit report. If you create a UDIN today for finalization of the financial statements, updating some income tax papers, you file it off. Subsequently, when you prepare the audit report, you might end up with a serious issue. At that time, you may not be able to come out of the problem. Then, yes, ISA 230 says 5 years. I'm sorry, SA 230, this clause is not yet modified. SA 230 says 7 years from the date of audit report. This 10 years was the earlier occasion. Now it is 7 years. You are supposed to maintain audit report, documentation, working papers, etc. for a period of 7 years. 7 years from when? Not from 7 years from the end of the financial year. 7 years from the end of audit report. In fact, we have signed one audit report of 31st March 2019 on 31st of March 2020. They have taken up approval from ROC, etc. So normally, if it is 7 years, 31/3/2019, you will have maintained up to 31/3/2026. It is not the case. For the financial year 31st March 2019, since I have signed the financial statements on March 2020, I am supposed to maintain till March 2027. 7 years, which is provided in the institute's guidelines. Sorry, please make the correction as instead of 10 years, make it as 7 years. Applicability of standards vis-a-vis the other standards. Please understand, there are various other standards which require additional documentation. SA 230 is overall documentation, but there are other standards which requires additional documentation that also you are supposed to maintain. For example, relying on the work of another expert, that is a standard which is available. You are supposed to maintain this gratuity actuarial report with you. That is also forming part of the audit documentation. Not only your audit documentation, this is part of the documentation. Anyway, it is part of the evidence, but at the same time, that external auditors, external experts report has to be done. If your company is audited, internal auditors is there and internal reports are there, take the copies of the report, relying on the opinion of another auditor. If you are the audit of head office and a branch audit is done by another auditor, take the report from them. Consider that. Have you considered that? All these things are from other standards. 230 is standalone for your records, and other standards, you have to be careful in doing that. I don't conclude any session without a proper case study. The reason is, here we'll be understanding. We have already touched some case studies. Let us go through only few case studies which are additionally which are already publicized. Satyam episode. As far as Satyam episode is concerned, it is known to everybody. There is no point in discussing beyond a level. It is inflation of debtors, inflation of assets, inflation of bank balance, inflation of interest income. All 4 items are there in case of a Satyam episode. If only the auditor had verified it properly, I don't say that they have not verified properly. I'm just taking for the case of understanding. If they have verified properly, they would have had the documentation properly. That is, whenever they did a bank reconciliation, they would have verified that these banks statements are. What has happened in that case is the MD has openly admitted that he has created bank statements in his own laptop that he has given to the auditors. But we are going to talk about SA 505 shortly. But the assessing the auditor, if he has taken the external confirmation from the bankers directly, this should have come to light. I don't know whether it has been done or not. I'm not going into the merits of that particular case. I'm just telling you to understand that this is a very, very critical component. PNB episode, please understand, as far as the Nirav Modi's case is concerned, by no stretch of imagination, auditor could have found it. But what happens is only one small thought process, which, because being a reasonably knowing some bank audit because of my exposure on that area, when the PNB global audit is being done, whenever there are overseas transactions which is not audited by me, but it is audited by the overseas auditor, somebody in Hong Kong has done the auditor, that they would have given it. In that audit report, they would have mentioned there was some exposure in respect of a letter of comfort given for an Indian branch. It should have been there. I don't know whether it is there or not. It should have been there. If it was there, the Indian auditor who is consolidating the financial statements here, he should have identified that and examined that. In that situation, the PNB episode might have, because it is done over a period of 3-4 years, at least in one particular, it could have come. Same way, Enron Corporation. Enron Corporation, once again, please understand, in Tamil, one song is there. There are Tamil audience, definitely, I'm sure. Thirilarai paarthu thirunda vittal, thiritai olika mudiyadu. All of you will understand, who understand Tamil will understand this. Unless otherwise, the thief himself is getting a concept that he has to be changed. It will not be changeable. So the management is doing something intentionally, you will not be able to identify. The point is, we should not collaborate with the management. In Enron, that was the case. The auditors have also collaborated. That's what the case is. I'm not saying that it has been done, but the case is like this. Auditors and management has collaborated. Auditor has taken, that is Arthur and Anderson. They have collaborated with the management. They have taken the amount of remuneration beyond levels, and they have taken audit remuneration and also other consulting remuneration. That is why this Code of Ethics 2019 categorically says, and Companies Act also is categorically saying, wherever you are doing an audit assurance practice, you are not supposed to do any other management advisory services. The reason is, if you give a consulting and you go and sit on the other side and you once again do the audit also, there will be a compromise. There will be a compromise which should not happen. This is what the intention. The main reason is Enron Corporation. It is not that Enron or Satyam or PNB is a new thing. All these things have been happening for centuries. It is not a new one. After so many years, they will do the same thing. But at that time, if you are not keeping your eyes and ears open, you are bound to have a problem. Let us not go with them for collaboration. It is, please understand, my dear friends, it is not restricted to large companies only. Lot of SMEs are also having a problem. Once an SME is having a problem, SMPs like us also will have a problem. It is not publicized. These things are publicized, but small management practices are not publicized. Or even publicized, it is they carrying for 3-4 days and then it is forgotten. Take the case of Kanish Gold case. It's a small medium enterprise only. Stock. Auditors have not verified the stock. That is what the allegation is. Internal auditors have also not verified. Stock auditors have also not verified. Statutory auditors have also not verified. You are not supposed to verify. Have you verified whether the management is recording properly, whether the inventory has been verified? Take the case of first leasing. Once again, another case of inflation of receivables. That is, they had only 100 contracts originally, but they have inflated as 250 contracts and they have taken a bank loan. Now, the bank has considered as a default. All of you know that the chairman is also named as a willful defaulter. The problem is the auditors, I don't know whether the auditors have also understood this. The auditors has to come and explain to them. That is a different issue. But my point is, in these cases, if our documentation is proper, you will be able to defend yourself that you have done the audit in a right earnest. And according to the dispute among partners, small firms dispute among partners is plenty. As long as everything is going well, no problem. Once there is a problem, you are in the problem. The last line, red line, ultimately, auditor becomes a scapegoat. In 1 year, our Chartered Accountants Day, Prime Minister was saying that you are my partners in station building. Yeah, next year he was saying why the auditors have closed their eyes for evil things happening. Because the transaction within 1 year has phenomenally changed. Please, and I request you, keep documentation properly, and even if you have made scapegoat, you should be able to escape out of it. The last 2 slides on this documentation, because I have one more standard to be covered. People get confused between documentation and audit evidence. Audit documentation is about planning and performing an audit and conclusions reached. Audit evidence is one small portion of the audit documentation. Audit evidence is the evidence sought by an auditor to satisfy himself about an authenticity of a particular transaction or particular activity. Audit documentation includes audit evidence. Whatever you do by way of an audit, create an evidence that be added to the documentation. So documentation is an exhaustive area, and audit evidence is one significant and small part of area. Please ensure that you understand the difference between these 2 items. To sum up, audit documentation should contain the following items: who has done it, what is the extent of work performed, time taken to complete it, what are the audit conclusions arrived at, whether it is true and fair, whether it is correct, whether any modification opinion has to be given, or whether emphasis of matter has to be given, what is the conclusion which has been given, whether it is right. 75% of the case we conclude as right only. 25% only we may have some discrepancy in case of AS9 recognition, whether you are concluded that what recommended recognition is correct or not. Who has reviewed the work? There should be a review mechanism has to happen. 4A's concept. Without 4A's concept, don't complete any audit. When was it reviewed? Review should happen before you give a conclusion. Not the review has to happen subsequently. Then it becomes a peer review. No purpose. Audit review has to happen before you sign the financial statements. After you do it, then it becomes a peer review. Significant data, documents conduct of which I already explained to you, very, very critical. The important, the black item which has been in respect of new client, please ensure that NOC is taken from the earlier auditor, communicate with the previous auditor properly, and terms of agreement is also critical. Wherever new client is happening, please understand, because why they are changing the auditor, that itself is a critical issue. Unless it is by way of rotation of auditors. Even in case of rotation of auditor also, you are supposed to communicate with the previous auditor and take a NOC from him and then only start the audit. This is very critical in respect of all practitioners. It is not restricted to only large firms, MNCs. It is not like that. It's applicable in respect of the smallest firms also. Please ensure in respect of a new client, take an NOC, because that auditor might be able to throw some significant light on that. Please understand, nowadays, a resignation is normally not accepted by the ROC just like that. When you say previously, we are resigning due to personal reasons was accepted. Now they are asking us, in listed companies only, that order has come by the government saying that why you are resigning, you are supposed to mention. But ROCs have started applying that concept to normal resignations also. So you cannot just like that resign, you are supposed to mention. So whenever there is a change in auditor, please go and verify what is the reason for the resignation. Is there any significant leave which you have to take it up for the purpose of doing the audit? So what are all the documentation? What are all the to be done I have done? Said, now I am telling what all the documentation. It's a sample, not an exhaustive list. But please understand, you should have an appointment letter. In case of a new files, previous auditors correspondence, both by RPAD only. Go by only RPAD or SPAD. No couriers, no hand delivery is okay. But unless otherwise you are having a comfort level. Because what happens is subsequently they come and raise an issue called forgery. Today I had received a case where it is mentioned as a forgery by auditor. I am handling a matter. The problem is, please understand, what will happen future, I don't know. Today you do by RPAD. You are safe. It reaches the party and takes the acknowledgement. Eligibility for audit. Anyway, eligibility will be done before accepting the audit itself. But once again, go for an eligibility check. It happens in such a manner that you would have given an acceptance that I am eligible for that. You might not be eligible because of various reasons. Because you might be taking an audit of a subsidiary company. You might be a shareholder of a holding company. There is a possibility. One of your relatives, close relatives, may be having a shareholding beyond 1 lakh. Please understand, I am not supposed to hold any shares at all. My relative can hold shares up to 1 lakh of rupees. There is a possibility that I am getting an audit of bank. One of my relatives, my wife or my brother, may be having shares of Indian Overseas Bank. I should not accept Indian Overseas Bank audit. Probably I will have to dispose of the shares and then accept the audit. Please understand that eligibility checklist has to be verified. Independent checklist, whether any of your relatives, that is, you are not supposed to take any audit assurance and assurance activity in respect of our relatives. Engagement letter. Please ensure that you prepare an engagement letter, because what happens is, even in case of small firms, there are lots of cases which is coming. They say, I have not asked him to do the audit at all. He has done the tax audit and he has filed. Fortunately, today we have a situation wherein when you file 3CR, 3CD, before filing, you are supposed to upload the auditor's name, and the client has to accept through his digital signature his appointment, and then we are filing the 3CA, 3CD, and the client approves it. Fortunately there. But the point is, the clients can go to whatever extent saying that this digital signature, they have taken it from me and they have filed it as it is. There is every possibility. But once you have an engagement letter in advance before taking up the audit, even in case of a small, please understand, all these is applicable in case of small cases also. It is not that in case of large companies, automatically they will prepare an engagement letter because their executives want to protect their interest. Whereas in case of small firms, they are not bothered at all. So please ensure that you have to save your skins at a later date. Statement of review of internal controls and risk assessment. Wherever you are taking up the cases where the risks are more, you please do an assessment according to that particular essay and prepare it. Prepare an audit plan, have a program, have a checklist. All these three things are independent. All the three things are independent. Audit plan is overall plan. Program is a detailed program. Checklist for a specific activity. All these things have to be there to do an audit. Sampling, obviously important, because we will not be able to verify 100% of any of the transactions. Please go through sampling technique, proper sampling technique, and how you are concluded on this sample will be sufficient. You have to record it so that at a later date, you will see this is a classic issue which is happening in case of a first leasing company. Sampling is one classic issue which is happening. Audit analysis and review paper. This includes your ratio analysis also and review papers also. Who has reviewed how things happen? That has to be found for basis of conclusion, whether it is true and fair view, whatever it is, it has to be there. Written representations, very, very important, particularly in respect of that. There is no partnership deal which has been done during the year. This is what the client will say. Please take a written representation. Apart from your own internal verification, how it can be done, you also take there are no frauds which has happened. Unless otherwise, in my case, insurance, unless otherwise they give a representation, people will not understand that. Because I had a previous year document, I was able to verify it. Written representation, please do it. And finally, audit report. This is the comprehension of working papers, audit documentation, etc. But please note, this is not exhaustive. It can expand to whatever extent possible. And please ensure that it is being properly done. I am through with my presentation on essay 230. The next thing is on external confirmation. It will not take more than 30 minutes, in my opinion. Chairman, what would you do? We'll go with the what do you call the question answer, or
we'll complete it and take all questions in the end, sir. That will be better, because both questions will take it together.
Okay, as you wish. Then I will have to have an extra gulp of water.
Yeah, please do, sir. Please take one more on my behalf.
But your video is off. You can take anything you want, even for juice you can have.
No, I'm as much listening like any other delegate, sir.
I'm blessed. So the second part of my today's program is external confirmation. Generally, what happens is, as far as this external confirmation is concerned, people understand that once again, this is applicable only in respect of larger firms, not in respect of small firms. It is not the case. This is equally applicable in respect of all the large, small, medium practitioners, as well as small, medium firms also. This is effective from 2010. But what is the driving force for SA 505? Once again, 500 is driving force. As I told you in respect of 230, once again, 500 and 501 is the critical force for 505 also. Because this is a critical evidence in respect of transactions which is happening with external agencies. Unless otherwise you have a confirmation from them, you will not be able to confidently say that the evidence is properly done or not. Let us go into the objective. The structure is almost like my essay 230 because it will be easier for us to understand. What are the objectives of 230 is retained, it is 505. To obtain reliable evidence. Please make the correction in the first line. It's not 230, it is 505. Once you take the copy, you can note down. To obtain reliable evidence, because I'm going to the next slide, then I will explain to you more what is reliable evidence. Obtain reliable audit evidence, direct response from the third party. Because the client is giving a confirmation of what has happened in Satyam episode will happen. He himself is getting every confirmation and giving it to you. As I told you, in many of my clients, they send the confirmation letter, but they say confirmation of balance, send it to the auditor directly. My mail is being given. There is a danger in that. Once I get a confirmation in my name, I have one classic case where I have got a confirmation directly into my mail ID, and he has declared that he is an MSME. He is an MSME. What happens is now I have to calculate the interest. In other case, probably if they have received it, probably they would have hidden it. They have not have shown me at all. Finally, what we will do in case of final conclusion is the client has not received any confirmation from the MSMEs. The client has received MSMEs. In respect of those cases, there is no interest to be provided for. This is what ultimately we say. But the point is, once it is a direct response from third party, it's always, that is third party is what is confirming party. Can be any form, once again, paper, electronic, or any other medium. Email correspondence is also sufficient, but not oral. But not oral. The evidence, the confirmation has to be clearly in writing. This is required. The objective is once again to assess the risk of material misstatement. Material misstatement, SA 330 is very, very critical component. Material misstatement, and also to design the audit procedures. Down the slides, I will be coming into importance of the audit procedures once again. This is what is about this reliability of the evidence. The center line, if internal controls are strong, internally generated audit evidence, written evidence is sufficient. Otherwise, you go up, it is most reliable. You go down, it is least reliable. I will go from the bottom side. Oral evidence, it is absolutely unreliable, not to be taken at all. Please forget about this. Whether internal generated evidence is acceptable? Yes, provided the internal controls are strong enough. Example, each and every payment beyond 10,000 has to be signed by 2 persons. Each and every payment beyond 1 lakh has to be signed by 3 persons. Each and every payment beyond 10 lakhs has to be signed only by the managing director. There is an internal control system like this. And if it is sincerely and meticulously followed, then that evidence can be accepted. Not exactly the same thing. I'm just telling you a classic example. Different actions may happen different. For example, take the case of creation of a database in ERP. When you create a data in ERP, one more important point which I want to drive home is, I don't know how many of you are handling ERP cases. When in ERP, what happens is, at the time of creating the client database, everything is captured. For example, if Sundararajan Associates is added as a supplier of service, first they add it as whether he is a supplier, whether he is a supplier of a good or service. If it is a good, in what classification it comes, whether it is eligible for input credit. If it is eligible for input credit, at what rate it is eligible? It is 5% or 15% or 18% as the case may be. If it is a service, whether it is eligible for GST, whether the supplier is having GST registration. If it is not eligible for GST registration, whether reverse charge mechanism has to happen. If I am an advocate, whether reverse charge mechanism, all these things are created at the time of creating the database itself. So here, what is going to be my audit procedure is, I'm just diverting myself into that activity. The audit procedure is, in case of a SAR, ERP or SAR, you have to go and verify the document creation data. Once you see the creation of document data, problem will be solved. Why I am telling this is, just take the case of compliance of TDS. Compliance of TDS. For a proprietary subcontractor, 1% TDS is sufficient. For a normal contractor, 2% TDS is compulsory. If it is not a contractor, if it is a consultant, 10% has to be deducted. If it is not a consultant, if it is a commission agent, 5% tax has to be deducted. If you are verifying the input data at that time of creation of data itself, all these things can be verified. So you can be comfortably said that the evidence which is being given to you at the end of the year for verifying the TDS compliance is right, because the internal controls are strong. Without proper verification, the data is not being added. That is one concrete information. But the next line is external evidence sent by auditor. That is, we are sending letter to the clients saying that please confirm. I am sending the information, they are confirming. The next level is, that is, they are confirming directly to the client. Evidence, external evidence requirement is sent by me, but evidence is being sent to the client. They are coming and forwarding to me. The next level is external evidence directly obtained by me, auditor. This is most reliable. External evidence directly obtained by the auditor from the respective party is most reliable. So from least reliable to most reliable, I saw in the previous paper, to obtain reliable audit evidence. What is reliable evidence? I am explaining here. What is the characteristic of a reliable evidence? That is, best reliable evidence is directly receiving from the confirming party. But there also characteristics has to be seen. Whether the provider of the information is independent of the client. Whether he is dependent on the client or independent on the client. The effectiveness of the client's internal controls. For example, in the Enron Corporation, the internal auditor was also colluding with the management. Statutory was also colluding, internal auditors was also colluding. In another case of WorldCom, internal auditors have only designed the fraudulent activity because they are paid by the management. Enron Corporation, there were only 2 company directors. All the other directors were independent directors. But independent directors have also failed in the review mechanism because they have been colluded. So collusion, we are beyond our auditing techniques. But what I am telling is, see what happened. That is why I always say maker-checker concept. There should be a maker and there should be a checker. If both of them are same, the potential for internal control lapse is there. We are also reporting one more statement called internal financial control reporting. In that, when these internal controls are not there, we are giving a report whether the weakness is there or not. Once again, here, second item, effectiveness of client's internal control. If it is properly there, the reliability is increased. Auditor's direct knowledge of the confirming party. If you are directly knowing with the party, your comfort level is still improved. Qualification of the individuals providing the information, which is also very critical. For example, take the case of a litigation in respect of a GST. If you are going for a verification on a GST litigation and the client says, sir, please understand this is not leviable at all. I have already filed a case in the High Court. I am definitely winning this position. You go and get a certificate or opinion, that is for which I am asking, sir, I am not able to convince you. The manager, we will be giving a note in the audit report because I am not able to conclude. In the note, I will say that management has taken an opinion from an expert that this is not applicable. For doing that, I have to take an opinion from a GST advocate or a person who is practicing on GST. If you go and take an opinion from Ramjet Malani for giving a GST opinion, it is not acceptable. He is a qualified advocate, no doubt. But whether he is a qualified advocate for giving an opinion on the GST, no. If you come and take an opinion from me, that is, whether the tax is applicable in respect of this, no, I will not be able to. It has to be going to an opinion of a chartered accountant who is expert on this in direct taxes, who will have to give a report. So this also have a significant impact on the reliability of the evidence. Degree of objectivity. Take the case of an actuary. There is a significant degree of objectivity. Whenever AS 28 is being applied for impairment, there is a significant level of objectivity which is there, because how it is going to be given as an impairment, it is significant objectivity for which you are going to rely on an expert opinion who is an engineer. What is the degree of objectivity? Accordingly, the reliability of evidence. Timeliness. You raise a question today and they give a confirmation after 40-45 days, which means there was a lot of afterthought. There might be, I don't say it is definitely there, but there might be an afterthought. These are the characteristics of reliable evidence. Once again, auditing is a very, very generic subject. Please understand, you can add n number of, probably the learned audience in this crowd may be giving me 2 more points to be added in this characteristic of reliability, because this is a widening topic. How do you do the reliable evidence obtention? Easy process. What is the external confirmation process? Select items for confirmation. You are supposed to select the items for confirmation. It is not the client who has to select the confirmation process. Design and form the confirmation request. You are supposed to design and form the. You can ask them to do it because you only know what you require. You only know what will be concluding, what will be able to be a proper evidence as an external confirmation. You only know how to conclude the final report on the basis of this evidence, not that any other person. Communication information request to third party. How do you communicate? Whether it is by way of an email or RPAD or speed post, depending upon the importance. Depending upon the importance of item, you can do this. Obtaining response from third party. You are supposed to obtain third party response, and finally evaluating the information or absence thereof. I have few more slides after this. On that, I will be explaining once again. Once you collect the information, you examine that and say what is to be reported. It is for you to decide how it is to be evaluated, whether it is acceptable or not. I will go through that. Definitely, when you are going for an external confirmation, you are bound to have a dispute with the management. Management may not concur with you. If the management concurs with you, problem is solved. If they don't concur with you, what is your steps? It's available in the SIA 505. This is not my input. It is available in SIA 505. We are supposed to inquire the reason for the refusal. We have to inquire the reason for the refusal and find out whether it is reasonable or unreasonable. If it is found reasonable, yes, there is a reasonable reason for understanding that. Then you seek alternative evidence which is available, which is reasonable and reliable once again. Evaluate the implication of refusal and determine. You have to see, just because client says, no, sir, you are not supposed to do for, I don't agree for that. I will not give any reasons at all. It is dangerous. You are supposed to evaluate. For example, once again, we'll go to the same, our own friend Ramalinga Raju. Definitely, you would have said that I will get all the confirmation given it to you. If only you are asking, no, sir, I will send a confirmation. What Ramalinga Raju will say, sir, I will not allow you because I don't want you to discuss with any of my client. I will have to examine the reason. What could be the reason? If it is possible, determine the extent of risk of material misstatement. If there is a risk, report it. If there is no risk, you can go ignore that. Perform alternative audit procedure. For example, in case of a banking transaction, you can verify the next month's transaction, examine whether it has been cleared. If it is cleared, what is the problem? There is no problem. You don't have to have a confirmation. Subsequently, the client has responded saying that you have supplied an amount of so-and-so transaction. I have settled. Accounts is closed. He has also given a TDS. He has given a confirmation. All these things are there. There is a very possibility that supplier has also accepted. Thank you very much for your material. The material is working properly. You would have given an email. That itself can be a future reliable evidence. All these things are possible. If the reason is found unreasonable, if the reason found is unreasonable, seek alternative evidence which is reasonable and reliable. This is the first step. In case you are not satisfied, communicate with those charged with governance. This is what the standard says. This is what the standard says. But unfortunately, in case of small and medium enterprises, those charged with the governance are the proprietors or owners only. In that situation, where do you go and communicate and what is the purpose of communicating? But Institute standard says, once you communicate with those charged with governance, your liability is closed, as per this essay. But the point is, once it is not satisfied and you are communicated with those charged with governance, And finally, when you do an audit conclusion, you are not able to say that the evidence is comprehensive or acceptable or satisfactory. You are bound to give your freedom of expression of opinion in whatever manner you want. I make it very clear that you have to go for confirmation, find out whether you can do, management is concurring with you. If they concur, well and good. If they don't concur, find out the reason. If it is reasonable, accept it. If it is not reasonable, go with these steps and close the matter. These are the forms of positive request. There are 3 types of request which is possible. Positive request, negative request, positive response, negative response, non-response. One more item is there, exception, that also will come. Positive request is always good. If the respondents say immediately, you are sending a confirmation, please confirm the balance outstanding on such date is except X amount. Also confirm whether you are an MSME. Also confirm you are satisfied with all these supplies, etc. There are no disputes with this supply which has been made by the client. They say yes, everything they give a positive. Yes, 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 yes. There's no complication at all. This is ideal. This is the ideal situation. Preferable when particularly in respect of large balances, which is very preferable because I will be comfortable to do the audit and close the matter. Blank confirmations, lower response rates. So all said and done, the response is critical for you. Once you get the response, you analyze that. Whenever you have a positive response, you can take significant impact of audit and close the matter. If it is not like that, you have to examine and verify. Negative response. Please appreciate whenever there is a negative response, you have to see with a suspicion mode. It is not that you are supposed to do an investigation beyond a manner, but once there is a negative, what is the sort of negative? We have received the product, but the product is not up to the standard. We are in the intention to return the product. In that situation, the revenue recognized itself is going to be bad, or you may be required to provide for a bad and doubtful debt. So you have to consider whether this provision for bad and doubtful debt has to be done in this case. In case of a long-term contracts, the clients say that that is, for example, in a construction of a factory, they say that the fact it has been complied, we are proposing to take up with the legal situation that the construction is not comprehensive or it's a serious issue. In that situation, we may be required to provide. So substantial errors are not accepted. So please examine. You have to examine whether it is positive or negative. Accordingly, you have to take a call. These are the types of response in a different manner. Positive response, no issue. Negative response, evaluate and conclude the audit report accordingly. Non-response, when you have not received at all a response from the party, whenever, in case of small items, you can leave it, because on the basis of materiality, if you have sent a response request from 25 people, you have received 20 people, 5 people you have not received, you can definitely ignore that, provided that 5 people does not have some major item. If one of these 5 items consider a major item, then you have to do a perform an alternative procedure to confirm and then have an obtain an audit evidence and report it accordingly. What is an exception? You have raised a query. He has answered in a different manner, which means the query is not either properly understood or intentionally they are given a instead of giving a negative point, they are giving in a different manner. What is an example? I am asking you whether you are an MSME. Without mentioning about that, he is talking about various other reasons. My factory is in Kundratur. He is giving a message like that. Negative response. He is saying that this is in Ambattur Industrial Estate. My unit is in Ambattur Industrial Estate. Does he want to mention that I am in a small scale industrial unit area? So you decide yourself whether I am an MSME or not. That should be ignored. You have to examine, organize, verify, ask for a second confirmation, and then do that. Because if he is leaving it to you for your own option, subsequently that fellow goes for a claim and MSME interest, you will be in a problem. Conclusions are to be recorded accordingly. Risk of material misstatements and frauds. External confirmation gives you a lot of information for you. On that basis, you can conclude. What are the examples of external confirmations? Banks, loans, current accounts, critical creditors and debtors. I'm not saying that you have to send for everybody. Critical debtors and creditors you have to do. External professionals hired by the company. advocates in respect of litigations and disputes, internal auditors in respect for the audit report, particularly in respect of internal control weaknesses. If anything is there, you can take it from internal auditors, because definitely now everybody is going on RBA, risk-based internal audit. So risks they would have assessed, on that basis you can conclude that. Actuary in respect of AS 15 gratuity valuation, leave encashment valuation, you can take a direct confirmation from them. Surveyors, whenever there are some losses by way of insurance or whatever it is, you can ask for surveyors. Same way you can add a number of people, engineers in respect of impairment, anything for that matter, you can keep on adding. Even in case of useful life of the asset, you may not be able to determine, the management would have given an independent thought process. You have to examine that. You go for an independent expert opinion. That is also possible. Whenever there are litigations in claim, other items I have left it like that because there are audit procedures in the normal course. But in case of litigation claims, I am spending an extra bit of time. The reason is, this is very, very critical. Wherever, because we are supposed to give a contingent liability statement. That is one side of it. But leave alone the contingent liability of statement. If it has a material impact on the financial statements, you are supposed to give a detailed report. From the above litigation claim list, the auditor needs to make inquiries with the management first, review the board meetings, committee meeting minutes, etc. You also have to examine the books of accounts, because this has to be correlated. Because in a simple inquiry, the management and recording it is not sufficient, because he is going, once you make an inquiry, it is going to be a oral inquiry only. It is not a written confirmation. If there is significant point which is raising on that issue, please write and get a confirmation. Review board minutes. Once again, board minutes is also not sufficient, because Enron Corporation, all the transactions have been properly recorded in the board, but the directors and independent directors were prejudiced. Auditors are prejudiced. Then it is going to be a problem. You have to see the books of accounts, cross-verify with this. For example, in the directors, in the board meeting also, they are saying there are debtors outstanding for more than 6 years. They said that all the debtors are good. For example, one of the directors is Enron Corporation. It's already insolvent. That's already insolvent. There is another organization which has been declared recently insolvent in Germany. They are called as German Enron. There is an organization which has been identified as a German Enron. It has been declared insolvent. Once it is declared as insolvent, a company is there in India which has some dues from that company. It is declared insolvent. Take the case of Kingfisher. Wherever you are doing an audit where he is having some outstanding from Kingfisher, don't you think that you have to provide for, you have an information from public domain itself that it is an insolvent company? Don't you have to provide for it? Even if the record committee minutes says, external confirmation is not there, but committee meeting minutes says that it is good. Do you consider it as good? Definitely not. So you have to examine, discuss with the in-house legal department, communicate with the external lawyers through a proper letter. In these cases, letter can be prepared by the management, because they are the person who are dealing with the lawyers. They can prepare the management. Please give your input, but maintain control over the preparation and dispatch of the letter. Please ensure that the letter is dispatched and get the information, and try to get the information from me. The letter should have all these informations. All this information should have list of litigation claims, management assessment of the outcome. What is their expectation? It is definitely succeedable. If it is not succeedable, what is the extent of level of succeed which they are expecting? What will be the provision which may be required? I have a classic case where a company has been supplying continuously service for a foreign company. One of the directors have taken the money from foreign itself. Yes, already taken that money. Whenever I sent a confirmation of balance out of curiosity, because 3 years is gone, and they have also applied to the Reserve Bank of India for permission of the money to be collected, because they have told them. When I sent a confirmation, they said we have already paid. One of those occasions. Finally, found out that one of the directors is misusing. We took a no confidence on that fellow, and subsequently, in the year, once I got a confirmation, please appreciate, my dear friends, I had made the entire company last going concern concept, and I have made the full provision in respect of the amount of outstanding in respect of that. Full provision has been made. The unit was taken as not going concern, because the person who was defaulted is the director who was in charge of the foreign operations. There was very, very minuscule operations inside India. The company has been removed from it's a small company only. Don't presume that it's a large organization. It's only 6-7 crores turnover company. We had to mention that going concern. The case is still going on. The case has already been filed in the Court of United States. The case is going on. Every year we are reporting, but fortunately the balance sheet is almost nil because we have provided for almost all the items. There is no complication. But why I am telling this is, please take a right call at the right time to send the ECs in a proper manner. Once again, how these external informations are critical. All these episodes will take you to a situation wherein how critical is external confirmations. Satyam episode, first leasing, external receivable, inflated receivables, reasons scam, Wirecard. This is what I was talking. German Centron, Wirecard, a technologies company who are having accounts across the world. They have created subsidiaries across the world. There was no balance at all in a particular country's bank account, but they have been giving this information by way of a confirmation, and auditors have also fallen gullible. I don't know whether there is a significant understanding. Let us not go into this matter because it is still in the process of discussion, and many more. These are the only few items which I thought of highlighting you. Let us come to the SMEs, because chairman was very specific, saying, sir, please address issues of SMEs and SMPs also. Please understand, this external confirmation is not only for large firms, it is also for SMEs. The partners dispute, as long as they are very happy, there is no problem. Once there is an issue in one particular year, this partners dispute will happen. I will tell a classic example which has happened 15 years back in my case. There were 7 sons of a person. There were 7 sons of a person. The person, when he wrote a will, he made it in a clear manner that neither of these 7 persons will be able to form a majority. So they ensured that each and every time the decisions are taken, at least 5 persons will be there as important decision makers, so that 2 persons will be the minority. Obviously, everybody will be okay. It has been going on very well. One of the decisions which has been, I am telling you this classic example because it's a small and medium enterprise only, but turnover was very good. What has happened in this case is, the understanding was the first person will be the managing director for 2 years. Next person will be the managing director for next 2 years. Like that, it keeps on going. It will be going for one more cycle. First person became managing director, 2 years, they enjoyed all the benefits, etc. Because managing director has some privileges of car, house, etc. All these things within brothers only. Second year, managing director. Second person became managing director. Third person also became 2-man. After the third person has happened, fourth person has to become the managing director. At that time, the third person became greedy. What he did is, the fourth person was a jolly-go fellow. He ensured that he is taken care of properly and he was given all the facilities. He continued to be the managing director for 2 more years. And the next year also, he wanted to continue in the same manner. The fifth person did not accept. It became a partner's dispute. What happened is, the auditors were also held responsible because as per the agreement, as per the partnership deed, this is statutorily required. Partner has all, but the auditors also colluded. This was an issue which has kept a rise an issue. It became a longer problem. I don't want to go beyond that level, but it became a problem. Small and medium enterprises, the auditor it was not a collusion, but it was considered as a collusion. It happened. Property disputes. What happens is, the balance sheet will consider some property. Whether the property is still there in their control or not, we don't know. Unless you keep on. In case of a company, today, Caro makes you compulsory to ask for the title deeds. If the title deeds are not there, you are supposed to say the title deeds are not available. But in case of non-corporate, is it compulsory? It's not compulsory. So you go by information from the management. Please understand, at a later date, if there is a dispute between the partners or the property itself is becoming a dispute, at that time, you will be in a problem. Why you have not gone with this? I will tell you, in a smallest of the smallest problem, in a religious organization, there was a situation that auditor has not verified the inventory. It has gone to a complaint to the institute. Even though I'm not required to verify the inventory. But if the audit documentation says that we have taken the information from the management, how it is being verified, etc., we are safe. Insurance claims, I have already explained sufficiently. And banking frauds, plenty. Banking frauds, plenty. property documents are being forged, partners' signatures are forged, two partners are authorized to sign, they sign by the third partner, it's forged. All these issues are happening. Auditors, please ensure that wherever external confirmation is critical, ask for that and they do this. This is what I have in my basket. I have shared with you. There may be many more items which can be examined and discussed, but they have given only 2 hours time for me. I have just crossed 2 hours and 3 minutes. I think I have completed my presentation. Chairman, over to you. Thank you very much for patient listening. For those who have been patient enough to see without seeing me, are able to hear me. Patience. Thanks for your patience.
Thank you so much, Sundararajan sir. In fact, we didn't know how 2 hours went actually.
Oh.
And one member had told that we should have given 5-minute break to the speaker. Sir, I took the liberty because I know the speaker very well. At a very, very small fuel, he can give a good mileage. So that's the reason we asked him to continue.
Once again, proximity with the people is dangerous. This is what is exactly in the audit documentation and external confirmation. Proximity with the people is dangerous.
Sundararajan, I'll just take over the screen and share the questions so that we can take those.
Okay. You want me to exit?
No, not but sir. It will just get exit. Just informing you.
I only request the chairman as well as delegates. The questions need not be very specific. Don't have questions which are very specific for a specific case. I request them to keep it to generic points only, because all said and done, each and every client is different.
Sir, I have taken all the questions. We'll skip some if the the answers need a lot of deliberation.
Okay, I request one of you to read it.
Okay. How do you deal with self-vouchers which are small in amounts, but sum total will be substantial? The payments would be to small service providers where the norm is cash and carry. How are we going to qualify this?
See, there are two components as far as this is concerned. 40A3, as far as your tax rate is concerned, it was giving you fantastic scope earlier. That is, if there is one expenditure, it can be represented by multiple vouchers. Or there can be one voucher for multiple expenditure. Thanks to the recent government, they have swallowed that option also. Now what they have said is, each item of expenditure, each time of payment, made it very clear, and from 20 they have brought down to 10,000. So everything is frozen. We don't have any option at all. See, this cash and carry matter, I will tell you a classic example. One particular company is, I think, how many questions have come? Because I will have to...
Around 20, sir, around 20.
Around 20. So I will have to make it short.
Yes.
I'm making a specific answer to this question. Self-voucher or whatever it is voucher, as far as you are convinced about these evidences, you leave it like that. If you are not convinced with the evidences, you are bound to say that there are cash payments which are happening beyond this level, and I am not convinced with this. You can, but it might not be requiring a qualification because it may not be material. Some amount may be substantial. I'm just taking a classic example of daily laborers. Daily labor. It is a case of daily laborers, freight. I'm talking about lorry fellows. It is a daily laborer only. 1,200 rupees expenditure will be paid for each and every driver. It will be natural process. You have to convince yourself and ensure that it is be accepted. Case to case basis. Same thing is not applicable in respect of all the items. Wherever it is possible, I will only one classic example I will share with you. In case of a rice mill, they say that I purchase rice only by cash because it is rural payment which has happened. There you don't have any other option. But wherever it is possible, you accept it. Wherever it is not possible, you have an alternate evidence and leave it like that. Next.
In some companies, there is a practice of issuing advances to those in charge of procurement of materials. The payments are made by them after drawing the amounts, and periodically they will provide the accounts. Majority of the payments would be in cash.
Sir, it is equally applicable, sir. The point is, when a staff goes to the market and keeps on incurring expenditure, once it is more than each expenditure is beyond 10,000, it is not his accumulation is 10,000. He can give an expenditure details to the extent of 2 lakhs also. But in that, if there are each expenditure is less than 10,000, that has to be picked up by us and it has to be disallowed. We don't have any other option.
We have practice of converting the audit working papers into PDF and digitally sign it and save it. That would be good enough, right?
Excellent. Perfect.
In majority of the cases, the management never collects the MSME certificates. What would be our responsibility in such situation? Just a disclaimer would be enough.
That's what I explained. So wherever the confirmation happens by way of a copy to you, to what extent it has come, we can leave it like that. Once again, if the organization is having an ERP methodology, when they give declaration for ERP itself, they would have given it. You don't have to go for a confirmation on a year-on basis. You can go and verify there itself if they have given document. Because I'm telling you, once the GST happened and RCM has come, now RCM is not there. I'm just telling you 2 years back when the RCM was in prevalence, many organizations sent notices to the subcontractors saying that please register with GST. I don't want to deal with people who are not registered with GST. First item. And then there were organizations which have said that go for MSME registration and come back to me because I want to have the registration. I can name few organizations who are making very clear 45 days is that credit time itself for the MSMEs. They get a confirmation. So it is not that every year confirmation alone is required. You can go to the database of the particular ERP cases and check up. If that is not there, disclaimer is only possibility available. Take a representation letter and give a disclaimer. That's all. You don't have any other option.
If in case we ask for copies of agreements from the client, but knowingly or unknowingly they don't share one agreement with us, how do we safeguard ourselves in such cases?
Once again, alternative audit evidence, external confirmations, comfortable with the client, internal controls available there. See, for why they are not sharing, we have to examine. If there is a malicious attempt which is able to be seen very specifically, better quit the audit. Better quit the audit. You are having the every right to quit the audit, specifically mentioning the audit working papers which they are asking, they are not giving. Last week I saw one resignation letter. It is very clear. The audit work has exceeded in this current year. We have asked for the increased remuneration because the the management's expectation has increased in certain areas. Risk has increased. So we asked for that. They have not given. I have quit. That itself has been given as the reason. Same way, I have asked for. There is one classic company, one listed company has become recently default. The auditor has very categorically said, since the information has not been given, I have resigned. I think, I don't know whether it is Deloitte or somebody. They have given open letter saying that we have resigned because information. Please understand, none of these clients are going to come and save you when you are in a problem.
Correct.
As long as you are not in a problem, no issue. But once you have a problem, they are the first. I can share with classic examples more than that, probably another occasion. Or the client himself is going and saying that I have not given the auditor approval to file it at all. He has filed by himself. I have written complaints. So let us be very, very clear. Like, I know DCJ knows me, but beyond that, there is no relationship which can go beyond.
Correct.
That is, there is a distance by which you can allow the other person to touch your nose. This is very, very critical. Be very careful. Next.
Sir, fire occurred in April and stocks damage. What is the auditor's responsibility?
I explained to you. See, if the stock damage is part of the stock which is available as on 31st of March, necessarily you have to provide for it. In my case, what I told you, June fire was happened. 31st of March, whatever be the stock, all these things have been converted and sold. There was no stock which was available, so I don't have to have a botheration at all. In my April, it is happening, and the stock consists of an item which is being disclosed as on 31st of March. To that extent, I have to provide for it.
Next is loan balance confirmations from individual banks under pool managed debt was asked, but the client has provided the balance as confirmed only by their asset manager. Will confirmation by asset manager suffice as per SA 230 or should qualify the audit report?
SA 230 does not say that you have to take from this person, this person, this person, but pool manager is sufficient enough in the normal course. But please ensure that whatever the external other evidences which can be happening, you please cross verify and then do it. None of us can. That's what I say. Specific examples are specific examples only. You will not be able to fit. You are the person who is sitting there at the time of finalization. You are bound to take that call.
What will be the auditor's role in case the management has not made insurance on one of the tangible assets?
We don't have any. In case it is a huge risk, in the IFCR, you have to report. In the internal financial control reporting, you have to report that there is a significant risk which has been there. But it might not have. For example, you can take the classic example of State Bank of India. Housing loans are not insured nowadays. They have taken a classic decision that housing loans will not be insured at all. But take the case of a house which is being constructed in a earthquake-prone industry, earthquake-prone area. Very dangerous. There, you have to mention specifically there is a significant risk involved with that. You have to, now qualification is required because that risk they are accepting that. That's all.
Will you please tell me, in the case of construction of buildings and the company is following percentage completion method, what specific audit documents are required to be maintained?
Simple. The calculations which happens there, the client has doing the calculation. You are not doing the calculation, hopefully. Client is going to do the calculation. For example, it is going to be construction company means construction of buildings. I hope it is not flats. If it is flats, it's a different issue. If it is buildings for industry, it's different. If it is flat, I will have clients to a unit-wise statement. They will be definitely having. They will be having confirmation of balance from the architect regarding what is the stage of completion. They will have the ledger accounts of the parties regarding the amount received. They will also have expenditure which is being incurred in respect of the building. All these things, they will have separate statements. That statement, you take it from the client. You also verify. You are not supposed, you cannot verify. For example, if you are doing a verification of Kiranandani, there are thousands of buildings which is being sold. You will not be able to verify all the 1,500 contracts. Pick up the highest level of contracts. Those items you verify in that particular list. Take a signature from the accounts in charge and take it as part of the working paper. That is sufficient enough. And regarding the percentage of completion, take the copies of the certificate given by the respective architects who is going to give you the certificate regarding the percentage of completion.
In case of real estate company engage in purchase of land and dividing into plots, but payment is different from amount mentioned in the registration documents, but total payment made by checks supported with MOU, how to specify in our audit report?
Please understand, if there are two documents maintained, this is for the crowd which I am telling you. I'm making it very clear. The second set of documents, I don't even take cognizance of. But if you get that sort of documents on your hand, you don't have any other option other than either quitting the scene or specifying that, asking them to file that. They don't have another option. Other option I cannot tell in a Zoom meeting. Okay. In case of any specific requirement, you can call me subsequently.
Okay. Next is, sir, do we need to have the engagement risk, understanding control environment, detailed risk assessment, communication made to the charge with governance, quality control review documentation?
Fair enough. Yes, we need to have. I will explain in that list.
May an auditor report that he couldn't do physical verification of inventory, can he employ another CA to verify the inventory?
First of all, I'm not required to do verify an inventory data. Please understand, we cannot verify entry. We have to ensure. See, the CARO says very categorically. Well, see, for example, in the COVID situation, I'm telling you, in the COVID situation, verification of inventory is very, very critical. In the documentation points when I was talking about, I wanted to mention about this. Just take a classic example of an organization which is dealing in camphor. In the lockdown period of 2 months, April and May, 100% sure that all the campus would have been evaporated. So when you do the verification of 31st of March, you are not supposed to verify today. You are not supposed to verify on 31st of March. In this situation, you might have an inclination to go and verify. Visit the client. Go and just check up because you have to save your skin. When I say that you are not under compulsion to do the inventory verification, but you cannot escape from it as it is. But you are not bound to do the verification. But when you yourself is not bound to do a verification, where is the question of asking some other person to verify? But I'm telling you a classic example. I'm internal audit for a huge company where statutory auditors is one of the MNC. MNC has part of the COVID documentation. They requested cut a confirmation from the internal auditor who has done the inventory verification. I was part of the inventory verification on 2 occasions. One is on 30th September for a limited review, on 31st December for the international consolidation purposes. Those 2 reports they took from me, direct confirmation from me. The MNC auditor sent a direct confirmation to me. Please confirm that you have been part of the internal audit team, which has done the internal audit on the consolidation time and also on 30th of September. Confirm, and is there any weakness, specific significant errors or whatever it is, they have asked me. I gave a confirmation. On the basis, he concluded. I don't say that this is compulsorily required, but at the same time, if it is possible, always see what happens is you are going, you are going in a going to a hill station. Going to a hill station without any major dress is one area. Have a fur coat. You are going to a thicker area. Go for a leather coat also. You are going for a further thicker area. Go for Eskimo dress. As much protection is possible. So the extent of protection which you require increases with the level of confidence you have on the client, level of risk which you are going to see, and the level of danger which you are going to foresee. That's all I can say.
There is an enormous increase in cost for completion of the project because of COVID-19. How to present it in our audit report in case of construction company?
AS7 very clearly says, whenever you start making provision under AS7, the total cost has to be determined today itself, including the contingent cost. So, in 2017-18, I have started the construction. Construction is expected to complete in 2020-21. So 2017-18, 25% would have been completed. 18-19 would have been 25%. 19-20, 25% should have been completed, but only 10% has completed. I'm just taking a classic example. But what has happened is cost escalation would have happened. So first year, you would have estimated 100 crores is the cost. For that 100 crores, you would have recognized 25%. Next year, there might be some escalation cost. Additionally, it has been there, plus contingent cost, etc. Second year, when you calculate, it is not 100 crores, it is 125 crores. So in that year, 125 crores you have to calculate. It is a dynamic situation. So in this current year of COVID, definitely this is bound to have an increased cost. That increased cost also, you have to add it in such a manner that AS7 computation, you should have the working paper in a proper manner. In the audit report, you don't have to say because of that it is increased or whatever it is. You can very well say that it has been done in accordance with AS7 on the basis of that is description you have to say. Cost calculated in respect of AS computation consists of the original cost plus whatever be the escalation cost which has been done on account of COVID and also in respect of the escalation. With that, you are safe.
Next is an email NOC acceptable? I'm just reproducing the institute's material, and this content is also put in the link which you are given. Now, after the announcement came on 1st May 2020, that email confirmation is possible, but ensure that a reply is received. If the reply is not received, you will have to find send it the registered post through AD so that you are tomorrow able to prove that you sent a communication to the previous auditor. Sir, anything to be added, Sundararajan sir, on this?
Email has to be from his official email ID.
Correct.
See, Sundararajan, I can have multiple IDs, no problem. But an ID which is not at all disclosed anywhere else. See, Sundararajan, I am asking for no objection certificate from DCJ. I wanted to create a problem. I create a mail called dungachand@hotmail.com. Instead of that, I say dungachand@readmail.com and I create my own mail ID and send it. It's not dangerous. What is officially known, you have sent a mail and taken it. Whether you are compulsory to go and verify and investigate, that is not the issue. But my point is, make it very clear, be very fair in the entire transaction. Without being fair, if you do something, definitely we are in for a problem.
In fact, the last 2 lines tells very specifically, sir, provided an acknowledgement of such communication is received from the retiring auditor's email address registered with the institute or his last known official email address. Such acknowledgement of communication would be deemed as valid evidence of positive delivery of communication.
That's all. That's all.
For bank confirmations, can the banker directly send from the official email ID to us? Is it valid and hold good? Is it binding on the banker's end in case of disputes?
Yes, very much. Absolutely.
In small SMP, most of the clients come at the last minute, and small firms are not finding time to send letters for getting confirmation. Most of the clients are not interested in providing the confirmation. What is the way out?
Go to my slide. I made it very clear. If they are not interested, find out what is the reason. If the reason is acceptable to you, you can ignore. If the reason is not acceptable to you, add additional documentation. Go through for additional verification and close the matter. Small. See, if I basically in respect of turnovers, see, for now what has happened is I'm making it very clear. In case of up to 5 crores, you are not having tax audit. Up to 5 crores, you are not having tax audit, provided it is all only check transactions. At least 95% of the amount is check transaction. Wherever it is up to 5 crores, please fold your hands and say that don't do tax audit. Without doing tax audit, compile all the financial information and upload it for the client. Don't sign. Non-signature is bliss.
Okay, next one, sir. Should the confirmation of balance be obtained only for the year-end balance, or can we rely on the confirmations obtained by the management with or without a copy to the auditor during the year as a routine process? If the mid-year confirmations are acceptable, should that be obtained closer to year-end, say in Jan or Feb, or it could be earlier also?
It can be anywhere, sir. The point is, but if you are taking a confirmation on April 2019 and finalizing the audit of 2020 March, which is what you call, I don't say it's error, but don't you think that itself is having some information? That is confirmation for the previous year, not for this current year. But at the same time, I'm making it very clear, in one of my clients, which is having huge number of debtors and creditors, we have taken the confirmation of balance. We have done the December consolidation. I'm telling you practical examples, sir. I'm always practical because I don't want to talk theory, because theory is always available for any of you to go through the books. I'm talking practice. When I finalize the accounts for December consolidation, which is happening on January 31st, at that time itself, I gave a list of items. In respect of these following cases, I want a confirmation to be dispatched now itself. Let them confirmation as on 31st of December, I will accept, because we can do forward working. But only catch in those cases is, for the group companies, we insisted on confirmation on 31st of March. For group confirmation, we insisted on 31st of March and subsequent transactions also, because I don't want to have cross verification at a later date. Because what happens is, in holding companies and subsidiaries, so exactly in the case of Wirecard technology, which I was referring to in the case of fraud, what has happened is this company completes the sale, the other company does not account the sales. It has been continuously inflating without confirmation. It's a serious problem. So any day is okay. Nearest to the date is advisable. Once again, reliability of the evidence. Whether the reliability of evidence, which is the most reliable evidence, which is the least reliable evidence. Non-confirmation is less dangerous than seeing a confirmation of the first month of the year. That's all.
Next is, it seems that the available SQC1 dates back to 2008. Is it okay to follow this?
Yeah, the institute is institute is asking us to update. Institute has not updated. That's all.
So probably they have covered it so that there are no additions. But now that peer review is undergoing some change, it may come.
Absolutely.
Is confirmation required as per SA 505 for credit balances or only receivables?
Sir, it is not credit balance, it is not receivables. For anything, I can go for confirmation. That is, as I was telling you, litigation. Where is credit balance? Where is debit balance? Nothing is there. There is nothing. Sir, when I don't have a bank account, so for example, one bank account is there. Account is closed during the year, as per the books. You have to send a letter to the banker and ask him to confirm whether it has been closed. So, the credit or debit balance, anything you can ask for confirmation. Wherever you have a suspicion, wherever you feel that it is having a possibility of a material mistake, concept is simple. Is there a risk of material misstatement or not? If there is a risk of material misstatement, your eyes has to open up. Just open up. In fact, certain amounts of the eyes have to open up. In case it is more dangerous, the pupa has to pop up.
Okay. Open or pop. Okay. Next is, sir, how would you establish independence when accepting an audit on the point of shareholding in the auditing company by relatives? how would you establish the extent of holding of shares by relatives?
Very, very tough. Absolutely tough. Because you don't know, of course, relative definition is there. They have given the relative definition. Those relatives you can go and cross verify. There's no problem at all. You can go and cross verify. This happens only in case of listed companies. Private small companies, it's not going to happen. In case of listed companies, these relatives, whenever you are going to get a listed company audit or a subsidiary of a listed company which may not be listed, in those cases alone, go and ask them whether you have, but relatives means husband, wife, spouse, and parents, whatever the list they are given. If they are in trading, you can ask for the information. But what happens is, if they don't give the information, we can't say. Subsequently, when there is some problem, see, when the problem will come. Let us go to the situation when the problem will come. Only when this company is creating a situation wherein the auditor has colluded. And see, for example, I am having a company audit and the shares are held up in my wife's name. Why I am holding it in his wife's name? There is an intention to work with the client, make more money out of this. I am also making money by way of what do you call share increase in value of shares. Only when somebody creates a problem, then it's going to happen. In the normal course, please understand, even if your client have shares may not be an issue. I'm not saying it should not be an issue, but as per law, it is an issue. Please ensure that you are safe. Don't do that. Well, let us not have that problem.
Yeah. Last question, sir. Can you suggest some alternative procedures in case of not getting debtors confirmation?
No, I'm just telling you, I will take classic examples. One is debtor. In case of a debtor, we are going doing the audit, particularly this year, we are going doing the audit after 4 months. Earlier occasions, we would have been doing the audit after 2 months or whatever it is. Go to the subsequent month transaction, whether it has been recovered. Leave alone 31st March outstanding, let it be there. For example, there is a debtors outstanding as on April 2019. 1 year down the line, if it is not required, definitely it is going to be a serious problem. But there are companies where the debtors settlement is after 180 days also. There are situations. And 10% is being retained as retention money. But if the 10% retention money is retained from 2016 onwards, if the contract says that the retention money will be paid back to you, provided it is the service is done for a period of 2 years. Third year it should have come, fourth year it should have come, fifth year it should have come. If they are not getting a confirmation, it's a serious problem. I will share one more classic secret for this. The point is, if they are not getting confirmation consciously in respect of long outstanding debtors, it is definitely a bad debt. You can find out from your own sources whether it is possible or recoverable or not. If it is not possible, you may ask them to make a provision. Provision need not be 100%. You can start. There is I am considered as a doubtful. Start making a provision of 5% this year onwards. Over a period of 3-4 years, it will be settled.
Yeah, thank you.
This is for debtors. This is for debtors. In respect of other items, each and every item, the confirmation can be different methodologies.
Yeah, thank you so much, Sundararajan sir. In fact, had I known that this topic required this much deliberation, we would have made it a 3-hour CPE rather than making a 2-hour CPE. Almost we are touching 3 hours.
But only thing is, you should have definitely given a break for me at that time for a cup of coffee.
So for all 5 to 8, we do give a 5-minute break so that people also can kind of relax. But anyway, I think it was an excellent session. A lot of new takeaways where we could do audit more effectively. And before I request Abhishek to make announcements and propose vote of thanks, I request our Regional Council member CA Panaras sir to give the closing remarks. He could not join in the beginning.
Before that, one more request.
Yes,
I would
sir.
like to have the questions sent to me. The questions
Immediately, sir. You will get it as soon as the session is getting over. It will be
because
there.
let us understand each and every question adds value in the subsequent programs.
You will get it in the next 5th minute of this session over.
Because we are also learning. Every day we are learning.
Panara sir, over to you, sir.
Sir, good evening, sir.
Good evening.
I am listening to you for the first time. You are excellent and so lucid that I did not even move out of my chair from the beginning. I came
Blessed.
5 minutes late, but then I have made almost 3 to 4 pages notes of what you have told. As you rightly said in the beginning, and the auditing is not a subject to be taught. It should be experienced. So that's what you have made us experience what is the real topic about. And really, as a chairman of the SIRC in Board of Ethics Committee, I am very thankful to you for stressing on the importance of the mandatory aspect of the standard auditing standards, which in my opinion, majority of the chartered accountants, especially medium and small practitioners, are not taking this part seriously till date. So they have to definitely you have given a very big what's called a statutory responsibility that is to be made by them. And I wish to make one or 2 points. You started with very 2013 amendment itself, and 2 things we very take home points are negligence and gross negligence are the things, only 2 things that are there, which will drag you to the disciplinary proceedings. And also, and always, it is auditors who will be the scapegoats, and the critical evaluation of every aspect of the performance of audit. These are the 3 beautiful things, and everything you have made drive home the points through excellent examples. And the explaining auditing this way, I have never seen, I have never experienced. Hats off to you, and this is the best experience for me in the topic of audit as a listener at the age of 60. Thank you very much, sir.
I'm blessed.
I think all the members also are definitely alerted through this one. And I have been seeing from the beginning, it is around 2:10, only 2-3 either way. The audience have never left the session. As rightly pointed out by our chairman, we don't know how 2 hours have gone, but very sorry that you are not given a tea break, which you very much deserved, because the amount of energy that is required for this, for your age, is one thing we could.
Sir, one request, sir. I'm not old, sir. Tell him, sir.
You are young, you are energetic, but still you wanted a break. But then our chairman did not allow you. He wanted break through questions. He wanted to answer the question. But he smartly told that let us take questions at the end. So
no, sir, the questions were so many that would have broken the rhythm actually.
Yes,
it was a
exactly.
conscious decision. Not that I wanted to put him into this thing.
yes, rhythm.
No, why I asked that was probably people also should not have monotony of us hearing the same voice.
Yes. Same with you also, sir. I could see so many times you are sipping water, and definitely we will take care. I request both chairman and secretary to take care of the speakers who are the real pillars of the institute.
No, Panaraj, as I told you, we know the mileage of the speaker. With little fuel, he can go a longer. Otherwise, we don't do that. I know him very, very closely. That is the reason we took liberty. And sir, if we had a pleasant experience because of his rich experience, I know he'll be a very, very appropriate person who will not just talk theory, but how practically we can do things in a better way.
That is the real takeaway for the day, sir. Without talking of practical things, talking about auditing or standards on auditing is not at all useful. That is there already in the books, but definitely it will not be useful. Thank you, sir. Thank you, chairman and secretary.
Yeah. Thank you, Panaraj, sir. Abhishek, over to you. Yeah. Abhishek, over to you for announcements and proposing the vote of thanks.
Thank you so much, Chairman. Sundararajan sir, thoroughly amazing presentation as always. We are used to getting this spellbinding presentation in bank audit, and now we are getting to experience in audit also, statutory audit also, and auditing standards. So we are really blessed to have you as a pillar of support for us, and the practical examples, case studies that you gave, and of course, naturally, you went to the actual provisions. You merged everything to give a truly wonderful experience to all of our members. So thank you so much, sir, especially for this very long session as well, without taking a break. So without further ado, I will also quickly share the announcements, our future announcements for our programs. On 19th of September, we have a virtual program on emerging challenges post-pandemic industry perspective and an auditor's perspective, along with a CFO's perspective, where we have CA Lakshmanan R, IAS and Executive Director of the Rural Electrification Corporation of India, and Shri V.S. Muralidhar, CFO,
and head of the global services and Asia Pacific for Messrs. Danfoss India. Danfoss India is a very huge company, so it will be an excellent session. On 21st of September at 6 p.m., at 5 p.m., we have a session on income tax exemptions for NPOs. The focus on the 12A renewals from 1st October onwards. Every trust has to get their renewal of their 12A registration, ATG registration, whatever it may be, and you have to get it in a span of 3 months. Everything will be done online. So we have CA Kandasamy and CA Daniel Selvaraj from Madurai who will be addressing this session. So please do register for both. And from 23rd to 25th, we have planned a GST conference, but the details will be shared with you once it is finalized. So request everyone to please join for all sessions. Stay home, stay safe. Thank you so much, Sundararajan sir. A special thanks to CA Pannaraj sir, who has joined us and gave a very lovely closing remarks today as well as yesterday. And of course, our dynamic chairman, CA Dungarchand Jain, who is spearheading from the front. Thank you all. Stay home, stay safe, take care.
Thank you very much.